Hello, everyone. Thank you for joining us. Before we get started, I already did the sound check, so I'm wanting to, this is Sherry. I'm your host for today's Traders Exclusive webinar. We're doing Map Out Your 2021 Trading Plan. You are going to love this. Please check out our website, tradersexclusive.com. We regularly post articles and video clips with valuable trading tips and techniques. This is also where you'll find a recording of today's webinar. Before we get started, I'd like to share our disclaimer. You know there is one. Let's go over to this. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Options, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. First off for today, please take some notes and write down any questions you have with a little bit of context. And then we'll be taking questions after the presenter is finished. And with that, I'd like to introduce to you our first presenter, who is Serge Berger. He is coming to us. Making you the presenter. Apparently can't do two things at once. Okay, there we go. Now you can share your screen. Serge is with the Steady Trader. He's bringing us Soar or Crash and what's next for traders. And he's been an active trader since 1998. And during his career, he's been a financial analyst, dealt in fixed income instruments at JP Morgan, and was a proprietary trader in equities, equity options, and futures. He's had exposure to a range of different asset classes, which allows him to identify which asset classes and strategies best fit his goal of achieving consistent profits. Over the years, Serge created a trading methodology that divides markets into different time frames and characters, and that allows him to more clearly and without emotions determine which strategies to apply in which situations. His account and those of his clients continue to grow during all different market environments because they focus only on the highest probability setups and follow strict rules. In the markets, every day provides new opportunities and a different environment for traders to navigate through. So he's certain that with the help of their daily insights, analysis, and commentary, you will find the path to become a consistently profitable trader, all the while enjoying the journey. So take it away, Serge, and thank you for being here with us.
Yeah, Sherry, thank you. It's great to be here, and happy Hump Day, everyone. Hope you guys are all doing well. We're gonna spend a little bit of time together here and go through, kind of how we see the end of the year and Q1 play out, and then more importantly, really dig a little bit deeper into a strategy that I am certain is going to be a big help for you as we look at the markets. And I think a lot of people think markets we're going to hum along the way they have. We have a very different picture in mind. I will right up front tell you that we're not expecting major crashes necessarily, but a very different market environment going through forward, and that's I think that's an important disclaimer up front. So let's get started. I think one of the questions that people are asking themselves is are we near a top? And took a simple chart here of the S&P 500, and what you're looking at here is one of those charts that's been floating around for some time. It shows this sort of megaphone pattern, or you can maybe look at this in different ways, but it's one of those patterns that kind of makes you kind of stop and think, because if you look at it, really since 2018, the S&P has traded back and forth between those two yellow lines that are moving in opposite directions, and we've reached the upper end of this again. In fact, we've surpassed it a little bit. So if this trend were to continue, then the next bigger move would be back down to the lower end. That's not our base case right now. I just wanted to point that out, but this is certainly something in a very simplistic technical matter to keep in mind. I think the bigger picture where people get hung up right now, and rightfully so, is when they look at the market and they see really what we will classify as a stock market bonanza. It's a feeding frenzy, and people are buying these short dated instruments, like for example the TQQQ ETF, rolling the dice on that one. Then you have crazy things like an ETF that is purely based on Tesla's 3 times daily movement. I don't know why anyone would want to create a vehicle like that, much less use it in your trading and investing activities. And we are, as a result, seeing people starting to blow up. This was a tweet that we saw come across a couple of months ago. I mean, you see these every day, but just as an example, people are getting blown up very quickly by being over levered when volatility strikes. And I think this is something that is very much resembles sort of the feeding frenzy that we have. And so it requires, I think, just a bit more caution than what people seem to be, for the most part, trying to practice out there. So there's a couple of very small changes that we would suggest one does to have a very, very different and better looking P&L curve going forward. This is a chart that just came across today. This shows the total options call volume. This is on the US indices. And you can see what that looks like in comparison to the past number of years. In fact, the past all the way back to 1992. So again, we look at this and really qualify this as a feeding frenzy. Even more so, a lot of these call options that are being bought out there right now are very short dated. So people have unbelievably short time horizons. And so that's certainly something that would kind of make us be a bit more cautious. Even further, if you go a bit deeper here, what you can see is that people are not only buying call options, they're also buying so much call options that the volume of call options is actually exceeding the amount of trading on, let's say, an underlying stock, which is quite something to see. I actually thought I would never see that to this extent, really ever, quite frankly. And then, of course, we continue to have this situation where a lot of market cap concentration is taking place on a few mega cap technology stocks, or at least mega cap stocks in general, from Apple to Amazon to Google and Facebook. Only one of those that I just mentioned is actually a technology stock, as an FYI, but a lot of concentration risk that I think ultimately could be something that could really trip people up. And that really gets me to one of the core issues that we see, and that's a lot of people really rolling the dice on the NASDAQ 100, and the broader indices up until recently have really lagged. You can see this is what we did here was took a ratio and divided the NASDAQ 100 divided by the New York Stock Exchange Composite, the latter of which is a much broader swath of equities, meaning representing much more the broader stock market and possibly the broader economy. And you can see the NASDAQ 100 essentially actually surpassing the New York Stock Exchange Composite, and of course the NASDAQ 100 is only 100 stocks. So that's a bit crazy. But I think, one of the charts that I really want to go through is also quickly is the short-term seasonality. Since we are just a couple of weeks left to the end of 2020, hooray. The seasonality pattern is quite interesting. So if you look at this longer-term seasonality pattern, this is a statistic that looks at presidential cycle years, like year number 4, like the kind of year we had this year, US presidential elections. And the data goes back to 1928, so it's a lot of data. And you can see in a typical year like the one we're having this year, from a presidential cycle perspective, we tend to have a strong summer rally, which we've had. You can check that off. We tend to have a negative September and October. You can check that off. We've had that. Tend to have a positive November. You can check that off. And ultimately tend to have a strong December. Now, so far December, the S&P 500 is essentially flat for the month. But the December tends to be quite back-end loaded, meaning the rally really ends up starting in the second half of the month. Maybe it's past the Fed meeting, which is happening here real soon, and that's an important note to understand. Now, the real opportunities here that we see going forward is going to be in what we call a little bit underneath the surface, and it has a lot to do with what we call the K-shaped economic recovery. The K-shaped economic recovery is a tale of two halves, the have-nots and the haves, right? So when you look at some of the companies and equities, for that matter, that have benefited, if we can say that, from COVID-19, a lot of it was technology, certain retail outlets, software services, and the kinds of things that you all know, Zoom, Peloton, all those kinds of things. those are the kind of things that did well, and I guess, again, for lack of a better term, benefited from this all. What didn't benefit, in fact, what got hurt very badly, and it's very, very sad, is anything in travel, entertainment, hospitality, and food services for the most part, and that's the red line. And the opportunity that we see going forward really well into the first quarter and possibly, quite possibly beyond, is really going to be a mean reversion of this hungry crocodile chart that you see here. If you imagine this as being the mouth of an alligator or a crocodile, you'd imagine some sort of a mean reversion move where we start to see some dramatic pickup in performance on the part of the part of the economy, which is the majority of it, that has done very poorly and really been hurt by COVID, and the stuff that has really had short-term benefit, where a lot of returns were brought forward. So that's really a big opportunity going forward. One part of the market where we see that happening, and it's already started to happen a little bit, is in the small capitalization space. And the small capitalization space is just recently, from, this is a pretty technical view, but it reached a long-term support line all the way back to 1925. The year 1925, you can see a long-term support line, and we're starting to bounce from here. And the way we're bouncing in a bit more of a near-term picture over the past multiple years is this, and we think this is going to be a big story going into 2021. The big warning, though, that we want to bring to people's attention, and this is also really what's going to tie into the strategy I'm about to show you, that's going to really be a big help to you going forward, is that if you look at the S&P 500 for the past 90 years, you'll see that the average annualized return has been about 10%, 9.8% to be a bit more precise. Now, that's nice and good, but the only trouble is that over the past decade, the S&P has actually returned closer to 14% annually. And that's, of course, about 40% more than the long-term 90-year annual average. So what we've done is we've brought forward a lot of returns, not only just on individual equities like a Peloton and a Zoom, but also really in the broader index level. And this is going to be a problem for a lot of people, because a lot of people are passive index huggers, or they are essentially and that works very well when the markets trend higher, or they are involved in strategies that are highly correlated to the broader S&P 500 index, or if you're in Canada or anywhere else, it'll be your local index. And of course, most strategies are very highly correlated to that. And we think the next 5 to 10 years, you're going to see an equity market that's very much different. We would expect nothing close to the even 10% per annum returns in the S&P, but something closer to maybe 2, 3, maybe 4 or 5% maximum on an average annualized basis over the next 5 to 10 years. We're not alone making that call. Blackstone, for example, was out there a couple months ago talking about the potentially of a lost decade for the equity market going forward for the next 5 to 10 years. And so I think that's well documented. Yours truly, it's already been discussed quickly. This is me just sitting at my desk here actually right now as well. I originally come from a bit more of a investment banking background. I'm the chief investment strategist and the head trader at thesteadytrader.com, and I'm also the chief investment strategist and one of the co-founding partners at Blue Marlin Advisors, which is a registered investment advisory company, an RIA, which means we manage money and do all that kind of stuff. Now, importantly is this. What a lot of people are, I think, not so much aware of is the fact that the average month-over-month return in the S&P 500 is completely random. So I don't actually think I can see the chat box or the question box here, but I'm going to ask this question anyway, even if I can't see it. Think about this for yourself, folks. How many of you are looking to have a potentially much steadier stream of positive returns, or an income, if you will, from the stock market on a month-over-month or quarter-over-quarter basis? Ask yourself that question, and if the answer is yes, I think you're going to be really intrigued what we're about to show you here for the next half hour. And what we're going to show you is a way that's going to not only allow you to have a much steadier positive return, whether that's month over month or quarter over quarter, but also allow you to be much better positioned for the next 5 to 10 years, when again, we think that the broader indices like the S&P 500 is very much going to underperform the average stock. And so what we're looking at in our strategies is not only does it potentially make a lot of money, but and more importantly, it's a much smoother type of return stream versus the S&P, which is completely erratic. So if you have the goal of having a steadier stream of positive returns, whether that's month over month or quarter over quarter, like an additional income, then the average S&P 500 is not going to cut it for you, because that's what most strategies are tracking. Not so much willingly, by the way. Most people's strategies are going to track for the most part what the broader equity indices do, the broader risk assets. And so, and you can even just look at, for example, this year, I took this chart a few months ago, but it's completely random, right? A big up months, big down months, and everything in between. That's not going to work for you if you want to have a steady stream of positive returns. And so for a lot of people, their P&L looks a lot more like this mountain range here, where they make a few good trades. And again, kind of nod to yourself if this is something that you've done or maybe you are doing. You have a few good trades, you do very well, you stick to your rules, and then boom, you have one nasty loser or maybe a couple of losing trades, and you're right back to where you started from. And you keep doing this, right? Again, a bunch of good trades, you do well, and then one nasty or two nasty losers, then you're right back to square one. That's not going to work. And the reason it doesn't work is because not only, of course, are you not making money, but also psychologically, it's a big hindrance on you to actually be able to participate in the markets in a healthy manner. So what we have found is that a lot of people need some sort of an income in the stock market, not only just to be able to actually make money, but also really to be psychologically in the proper mindset to trade. So think about this. What if someone were to give you 3,000, 5,000, 10,000 bucks at the end of the month, every month, regardless of how you performed in the market, right? Wouldn't you agree that you'd be more calm and more relaxed and more willing to stick to your rules and more patient? And I think pretty much everyone would probably agree that that's the case. And by the way, it doesn't matter whether you're working part-time, full-time, retired, semi-retired, soon to be retired, whatever. This is going to be something that you can use because it doesn't require a ton of time. So the way it works is what we found through working with investors, anything from institutional to retail, and really across the world through the past my 22-year trading and investing career so far, is that stagnating or losing accounts lead to what's called a loss of confidence, not only in the strategy that you're applying, but also maybe in yourself. And then that in turn is really kind of where it starts snowballing, and it really goes down the drain from there, because you start getting to the point where you lose, you're no longer doing any risk management, and again, you're just basically gambling. And so what we're about to show you here is a strategy that's very low stress. It's very high probability. And I think the most important part of it all is that it's very, very, very repeatable. The repeatable part is the most important part. It doesn't require a lot of time, and it has a very high hit rate. So out of 10 trades, roughly 8 to 9 should be profitable, and the 1 or 2 losing trades out of 10 on average are not going to wipe out all your previous gains. That's an important distinction to make, because a lot of people don't disclaim that part. We certainly do, because that's the case. You're not going to wipe everything out again after those 1, 2 lose, and that's why it's such a high probability strategy. So at the very core of the strategy, and this is where we get into the meat of it all, we talk about these very steep slopes that go vertical, right? Like right now, for example, we'll touch on in a minute, like a stock like Baidu. BIDU right now it literally has one of these charts. The stock has gone from a steep slope to vertical, and at some point, the stock becomes so overbought that for a period of time, usually 1 to 2 weeks, it can't continue higher. Certainly not a lot higher. And this happens also on the downside. You can have a very sharp drop and then a vertical collapse, and the stock is probably going to pause and not going to continue much lower, right? And that's really where the opportunities are. So a couple things happen when we have a steep slope that turns vertical. The first thing is that implied volatility increases or becomes at least somewhat elevated. The second thing is that investor fear or greed reaches extremes, and that in turn really leads to an unbelievably high probability trade for what we call a counter trend trade. And so let me elaborate on that here over the next few minutes. First of all, I don't know if any or how many of you have traded options before, but here are the options selling statistics that people will tell you. Now, it's really important to understand that these statistics technically are true, but unless this is done the proper way, these statistics are not only not true, they're also unbelievably dangerous to believe. So let me walk through this. First of all, what people are being taught is that the odds are strongly in the option seller's favor. That's one thing that people tell you, and here's why. What they'll tell you is that if you are going to sell an option, you have a 75% chance of making money if you hold it to expiration. Now, the reason why they tell you that is because the opposite of that is true, that if you hold, let's say you buy a call or you buy a put, and you were to hold it through expiration, the statistics are very clear that you only have a 25% chance of making money. If you buy a call or a put, you hold it through expiration, the odds of you making money are only 25%. So what they're telling you is that if you just do the opposite and become a seller of options, you have a 75% chance of making money, which is not only crazily not true, it's also very, very dangerous to believe. And I'll show you exactly why that's the case in a minute. And then they'll tell you to do this, what's called the theta game, the time decay game, where they tell you to sell short-dated options to pick up the time decay. Statistically speaking, and over tracking this and doing this really for the most of my life, I can tell you that's over time a very dangerous and losing strategy. We're going to show you a cure to that type of an approach in the market here right now. So at the very core of the strategy, and this is what we're going to go through together right now and rinse and repeat, is we're going to look for some very steep slopes that have gone vertical and give us signs of exhaustion, very much like the chart that I showed you a minute ago. We will make sure that the implied volatility is somewhat elevated. In other words, that the options are at least somewhat expensive. We want to make sure that the liquidity in the options is good. In other words, that it's easy to get in and get out. And then number 4, very specifically, what we're going to do is we are going to sell far out of the money call or put spreads using options expiring 2 or more months out in the future. Now, it's very important to understand that if you've done anything like this before, I can just about guarantee you've never done this specific way, because this makes all the difference. There's a very specific thing that we do that I hate to call it a secret sauce, and so I won't, but it's a very specific thing that we see that 99% of people don't do when they do this, which is why they're not making money with this kind of thing. So let's have a look at this, and the goal really is to rinse and repeat this strategy on a weekly or on a monthly basis, and really get that income machine going and build a layer of income for you on a month-over-month or quarter-over-quarter basis. Again, at the very core of the strategy is this concept, or the fact of steep slopes that go vertical. So when a stock goes vertical, in this case to the upside at some point, it has risen so much out of its steep slope, it's gone vertical, it simply can't continue higher for a period of time. Same thing here in Netflix. You can see a steep slope goes vertical, and it just is going to pause at least for 1 to 2 weeks. So when the slope goes vertical, the upside is very capped, or the downside is very limited if the move is to the downside. In other words, the asset will tend to stall in price. And oftentimes, and this is a bonus, you'll actually get to see a mean reversion move in the opposite direction that follows very quickly. That's a bonus. Now, what we're going to do is I'm going to show you an example here in Facebook. And we're going to look at a historical example first, and then we're going to go into the live market, because not only do I want to show you how this works, I also want to prove to you actually that it works. I hope that's a fair deal. So what we're going to look at here in a minute, and the live chart is the chart of Facebook. Again, this is a historical example. We're going to go into the live market here in a few minutes and show you the real-time stuff, so you can see that it actually does work in real time as well. So on Facebook here, you can see at the time the stock had this steep move to the upside within those 2 parallel lines. But then it had these couple of vertical moves, very much like we just talked about before, right? The steep move that goes vertical. You see a steep move goes vertical, steep moves goes vertical, and so on and so forth. And every single time the stock went vertical, yes, it mean reverted back lower, but more importantly, it stopped going higher. It paused, at least for a period of time of a couple of weeks or so. So let's have a look at this example, and I'm actually going to bring over the actual live current chart of Facebook so I can draw in some annotations and make you see this very clearly. So again, this is the same chart I showed you a second ago. Again, the steep channel to the upside at Facebook at the time there. And let's focus on this point in time here, where the stock once again moved to the upper end of its channel. And what you'll notice here is when the stock gets to the upper end of its steep slope, there's a couple things you could do. If you own the stock, maybe you take some profits. If you want to be more bearish, maybe you buy a put, or you buy a put spread, or you short the stock. But if you short the stock or you buy a put, the only way in which you'll make money is if the stock goes lower, right? If the stock doesn't go lower, you cannot make money if you are short the stock or you buy a put. Does that make sense? Right? Unless the stock goes lower very quickly, by the way, and meaningfully, unless when you buy a put or you short the stock, you're not going to make money. But so basically, you have a 1/3 chance of making money. Why 1/3? Because the stock at any given point, just like at the point there, won't only go lower. I mean, it certainly could, and in this case, it did. But does it have to go lower? I wish it was that simple. It could also go sideways, and of course, the stock could go higher, right? So the stock at any given point, including at that time there, can do one of three things. It can go down, it can go sideways, and it can go up. So if you're going to short the stock here or buy a put, let's say, and you only make money in this one direction, you have, all else being equal, a 1/3 chance of making money. Does that make sense? Now, to me, in the world that I live in of creating steadier positive return streams for our clients, both on the money management side and on the research side, this is essentially akin to gambling. So what we like to do a different bet. We like to make the bet of where the stock is most likely not going to go, as opposed to making the bet of where we think the stock will go, which is a very, very different bet. So in this particular case, we used options to make that bet that we just simply don't think the stock, after having just rallied vertically to the upper end of its steep channel, the only bet that we're making is that the stock doesn't rally more than another, let's say, 8% against us, which is to say that we're going to make money whether the stock goes higher, okay, up to 8% against us. So we could be totally, completely wrong and still make money. I'll make this red. Whether it goes sideways, we make money. And even if it goes down, we make money. So in more than 2 out of 3 ways, we make money, right? So how do we do this? Well, what we did at the time, and again, this is a historical example. We're going to go into the live market in a minute. We used something called, it's a wordy word. It's very simple. We called a bear call spread. It's very simple. It's a couple clicks through your mouse on your broker platform. You can do this. In other words, what we did is we sold a call option at the 125 strike level, at the 125 strike level of the stock. And then we bought against that another option for protection at the 130 strike level. And we received a credit, like we actually received money to take that trade, which means we received $1, which translates into $100 per options contract. Or if we did this with 10 options contracts, we would have received $1,000 deposited into our broker account. Now, in this particular case, you can see that, yes, the stock did go lower, and I'll show you guys examples in just a minute where the stock didn't go at all in that direction that it would have preferably gone to, and we still made money. And we'll show you exactly why that is. But in this particular case, the stock did go lower, and that initial spread of $1 or that initial $100 we received reduced down to $24, which means we got to keep the difference between $1 and 24 cents, which translates into a profit of $76 per options contract, or $760 of profits having used 10 options contracts, right? And the way this works is as long as the stock doesn't rally more than 8% against us in this particular case, we can make money. So how many of you can see that, all else being equal, putting on a trade like this puts you in a dramatically higher probability position to make money? And just, you can answer that to yourself, and I'm sure a lot of you would agree it's a resounding yes, because you're going to make money whether the stock goes lower, sideways, or even in this case up to 8% against you, right? And so because it's got such a high probability of a profitable outcome, there's one important thing that we need to do, and I'll cover this here right now. What a lot of people do with this kind of a strategy is they use very short dated options, and that's where they blow up. And so I've my entire career done this kind of strategy, and the reason why it works what we do is because we don't use short dated options. So you might notice here at the time, at the month of February, we did not use February options. We didn't even use March options. We used April options. But we only on average hold our trades for about 1.5, or let's say 1 to 2 weeks. So that's literally 180 degrees different of what most people do. most people will either use long dated options and then hold the trade for a long period of time, which is very risky, or they use very short dated options, and which is a complete gamble because it's a binary outcome. What we do is we'll use options expiring, let's say 45 to 75 days out, but we only hold the trade on average for about 1 to 2 weeks maximum. And that is where this turns into a very high probability income machine for you on a month over month, quarter over quarter kind of basis if you make sure you do this properly. So this is really important. So think about this. If at the time here in February there, we would have used, let's say, February options instead of April options, and let's assume the stock would have immediately rallied, let's say, 5% against us, because we would have used short-dated options, we would have lost a lot of money very quickly. In other words, if you have a car with 4 wheels, you would have just lost 3 wheels and you're toast, right? And then you're right back to that situation where you have a bunch of good trades, 1 or 2 bad ones, and you wipe everything out again, all the gains you had over the past few trades. But what we do is we use options expiring 45 to 75 days out, but we only hold the trades for 1 to 2 weeks. And so if in this particular case, at the time in February, having used April options, if the stock would have immediately gone, let's say 5% against us, we would have barely lost any money. We would have maybe had a deflated tire, right? We wouldn't have lost any wheels. And that's a really, really important point to understand when it comes to managing risk. So what we are doing very differently from most people is we use options expiring 45, 75 days out, but we only hold these trades for an average of 1 to 2 weeks. And that's a really, really big difference of why this works so well. You can see, for example, here in Tesla, we did the same thing there, except there we did it on a more bullish tilt. The stock had completely collapsed, steep slope to a vertical drop. And we did a very similar thing, except here we did it in the opposite direction. So here we sold a put way down here, like 20% out of the money. We bought another put against that for protection. We received 225, which translates into $2,250 of credit, of money deposited into our broker account for 10 options contracts. In this particular case, the stock did rally, and we ended up keeping as a profit $1,820 of that initial 2025 that we received. But again, the stock didn't have to go higher. It could have just as well gone sideways, or in this particular case, the stock could have dropped another 20% and we could have still made money, right? So that's a really, really important thing to understand. I'll give you an example here in the S&P 500. This is a trade that a lot of you guys might recall from earlier this year because it's just just in March. And this was the S&P 500, the SPY. So at the time on March 16th, we came into the office in the morning and the S&P was down like 28, I think, percent over the course of the past 3 weeks at the time. And so we weren't comfortable buying the S&P, but we were comfortable making a very simple bet. And that bet was that we didn't think that the S&P would drop more than another 18% against us over the ensuing 1 to 2 weeks after having just dropped 28% in 3 weeks. And so what we did is we sold a put option way down here at the 190 strike level on the SPY ETF. We bought against that for protection a put option at the 185 strike level. We received $1,050 deposited into our broker accounts for doing that bet. Now, a few days forward on March 24th, here's what happened. The S&P 500 actually hadn't done anything. It was at the same spot on March 24th as it was on March 16th. But somehow, miraculously, or maybe not so much, we made 11.4%. All right. And if you would have bought the S&P or you would have bought calls or something like that, you would have lost money. Right? So this is a very, very different way of doing things. And again, we would have made money whether the S&P went higher, sideways, or in this case, even up to 18% against us. This is a really high probability way of doing this. But one question that remains is, Serge, how do we find these points in time to put on a trade like that? I'm glad you asked. Let's understand something very, really important. I'm going to go straight to it in the interest of time. Can you guys see those little blue arrows on the chart? Those blue arrows is what we have dedicated an algo to that tells us exactly when a market, a stock, an index, a commodity, a currency, hell, even Bitcoin, when it's dramatically overbought or oversold, right? And you can see to the right of these blue arrows, the stock stopped going higher. Yes, it went lower, but it stopped going higher, more importantly, for about 1 to 2 weeks. That's our time period. It can go lower for a lot longer, but that's our time period, 1 to 2 weeks, right? Or here, for example, in Alphabet, i.e. Google, right? You can see to the right of the last blue arrow, Alphabet stopped going higher. It didn't go higher for 1 to 2 weeks, right? That's the opportunity. That's what we're putting on our trade. Or here in an ETF, you can see to the right of the blue arrow, the ETF didn't do anything to the upside over the next 1 to 2 weeks. In fact, ultimately even completely collapsed. So let's play a little game, follow the indicator. And again, I unfortunately can't see you guys' questions, so I'm just going to go through a few tickers that I would assume you guys probably know, and I'm just going to type in some tickers. So for example, actually one stock I'm looking at right now because I kind of want to buy it, WDAY. You can see, for example, here, the last time it printed these arrows was on August 31st. And you can see once the last arrow prints to the right of that arrow, the stock stopped going higher for 1 to 2 weeks. In fact, in this case, WDAY actually corrected or collapsed 21%. So what we do at the time is we sell a call here, we'll buy a protective call against it a little bit higher, we'll receive a net credit, we keep the trade on for 1 to 2 weeks, and we move on with an income, right? So let's just look at some other examples. And I'm just going to go through, again, I unfortunately can't see you guys' questions, so I'm just going to go through, like, for example, and by the way, I have a different resolution on this monitor than on the other one above me. That's why I have to keep going back and forth. We'll look at Intel, for example, right? And I'll show you guys this on an intraday chart as well. But for example, Intel, you can see Intel had a very oversold reading in July, and the arrow started printing. And once the arrow stopped printing at the time there on July 30th, the stock stopped going lower, right? At least for 1 to 2 weeks. So what do? Well, we're going to sell this put spread, meaning we're going to sell a put down here. We're going to buy a protective put against it a little bit lower, keep the trade on for 1 to 2 weeks, and we're going to make money, right? The stock stopped going lower. Or how about here? This was in October, so it's just a bit ago, just a bunch of weeks ago. To the right of that last arrow, when it stopped printing, the stock stopped going lower for at least 1 to 2 weeks. In fact, Intel actually did end up rallying 17%. That's besides the point. That's your bonus payout, but we're not counting on that because we're going to make money whether the stock goes sideways, in this case, higher, or even notably against us to the degree to where you set your option strikes, right? So that's how we find these things. How about like Adobe, right? And I'm just trying to find tickers that you guys probably know. If we could have the tickers show, if I could have you guys type in tickers, we would just literally take your ticker symbols. But I'm just going to go through some that are, off the top of my head that people probably know. Adobe, right? Same story here. To the right of the blue arrow, what does the stock do? It stopped going higher for the ensuing 1 to 2 weeks. In fact, it ended up dropping 15, 16%. So we sell a call up here, we do a buy a protective call a little bit higher, and we keep the trade on for 1 to 2 weeks, and we collect our income. Again, we're trying to generate another source of income. Is that starting to make sense, folks? Can you guys see how this works? Can you see the rationale behind it? Great. So let's, for example, Illumina. Let's Illumina. Again, I'm just trying to think of stocks that you guys probably know. Let's have a look at this one here. A couple of months ago, it printed this arrow. What happens to the stock once the arrow stopped printing? Well, the stock, in this case, rallied about 32%. But again, what you would do is you'd sell a put down here, buy a protective put it a little bit lower, take in the income, keep it on for 1 to 2 weeks, and move on, right? And you rinse and repeat that. And that's exactly what we do. Or for example, GDX, and again, I'm just trying to think of names you guys know. The GDX is an ETF on the gold miners. The last time it printed when it was severely oversold was here. What do? You sell a put, buy a protective put, GDX, it went up on the rally 175%. How about, let's see, how about Grub, GRUB? I think, again, I'm trying to think of names that you guys probably know. So GRUB, last time it printed was here a few weeks ago. What do you do when the arrow stops printing? You sell a call, buy a protective call, generate the income, keep it on for 1 to 2 weeks, and then you're going to make money whether the stock goes lower, sideways, or even quite a bit against you, right? So this is a really, really important. And by the way, I think I just finally got the chat box. If you guys have certain stocks you want to look at, by all means, let me know, and I can type those in. On an intraday basis. Oh, by the way, I'll quickly show you. Disney just printed the other day. If I could type this in properly, Disney. You can see Disney right now actually printed. So we're in a trade in a bear call spread, and what we are now looking is for the stock just kind of go sideways, maybe a little bit lower, maybe a little bit higher, keep it on for 1 to 2 weeks, and move on. On an intraday basis, if anyone here is a day trader, by the way, I'll just quickly show you this. On an intraday basis, this works as well. So, for example, I'll show you. I don't know. I'm just trying to think of anything like a futures contract. Let's see here. Get an intraday chart, like a futures contract here. So, like this is the S&P futures. Actually, the Nasdaq futures. You can see it printed here overnight, and then they ended up dropping. Quite nicely. So this works on an intraday basis. It works on a daily basis. It really works in any time frame. Now, if you guys are interested in this type of trading, what we can do is we can offer you the Options Income Secrets, which is a course that teaches you all how this works, but it also gives you the actual indicator, and it comes with a scanner as well that I'll show you here in just a second as we wrap this up. But the best part about it is that it's really just a done-for-you platform. So, for example, it works. The indicator you can install on Thinkorswim, TradeStation, NinjaTrader, TradingView.com, and also on Market Rover. So let me just quickly show you so you can see how this works. So like right now, for example, Baidu is on our overbought scanner. It's a very simple. It's an overbought scanner and an oversold scanner. So like right now, you can see Baidu. I literally just clicked on BIDU, and you can see right now the stock's printing overbought. Once the arrow stops printing, which I'd expect to happen tomorrow, we're going to enter a bear call spread. So it literally finds you these severely overbought and severely oversold readings on the chart. The way you can get this is you can go to the steadytradersecrets.com/secrets, and what we do is every single month we do a members webinar where we give you not only an actual teach you how to use it, but also we give you every single month, once or twice. We do up to 3 members webinars. We give you a live actionable trade idea. So the course itself is $199. The market scanning sessions that we do every single month, 1 to 3 times, is $497. The indicator, which is yours to keep, is $1997, and we have an Iron Condors Made Simple a module as well. So the package value here is almost $2,700. We will make it available here for you guys for $297. That's a one-time price. That's not a recurring fee. It's available for the next 50 people. So, and by the way, that's a 90% off. So instead of paying $2,700, all this here, including the monthly webinars we do every single month, where we give you an actionable live trade idea every single month, is also going to be available for you. So let me see. The webinars, by the way, the next monthly webinar is next week on the December 22nd. We're going to give you the next live trade idea there. And again, the point really is to make sure that you understand how to use the strategy, which is why we do the monthly webinars as well, to give you a trade idea and also to get you to the point where you can start doing this yourself, which is very, very simple. When you log into the website, you're going to go to Vertical X Pro, and again, you'll receive welcome emails on this. You'll have the indicator to install on the different platforms, and you'll also be able to watch any bonus pass recording webinars that we've done. Again, we do from 1 to up to 3 of these member webinars every single month, and this is essentially a lifetime deal. It's not a recurring fee. It's $297 for the indicator, the scanner, the lifetime monthly webinars that we do with the live trading idea and all the scanning and everything explained that we do. And it's available at 90% off here for the next 50 people for $297. That's not a monthly fee, it's not an annual fee. It's just a one-time price to become a member. And you go to steadytradersecrets.com/secrets. And I think with that, I have just about exhausted my time. I don't know if there's any last-minute questions here, but I'm happy to pass it back to you, moderator.
Hi, Serge, it's Sherry. Hey, you did have one person that wanted you to check out the NIO, but I think what they should do is email you. How do they get in touch with you?
They can just email the support staff. It's support@thesteadytrader.com, where they
Okay.
can probably, yeah, yeah.
And I put up the link to your offer. That is a fantastic offer. So we really appreciate you being with us here today. And I hope you have
Sure.
a great holiday season.
Yeah, thank you. You too, Sherry. Really appreciate it. Happy
Thank you.
holidays.
You have a great day.
You too.
All right. We're going to go to, I've got to tell you a little bit about our tradersexclusive.com. And I hope you're not getting a lot of echo. Let me just fix this right here. So if you have to leave early, I want you to know you can listen to this webinar again if you go to our tradersexclusive.com, and then it's /archived_webinar, and you'll be able to see all of our webinars that we've had. We usually do 2 a month. In December, we've just done this one, so you guys are in at a good time. Next up, we have Troy Noonan with us from Backpack Trader. And he's going to give us how to potentially maximize your profits in minimal time. So let me just bring Troy. Troy, you're self-muted. Are you with us? Okay.
There it is. It wouldn't unmute. Hi,
There we
Sherry.
go. How are you? Good to see you. Thank you for joining us. Folks,
Oh,
I just wanted
yes.
to tell you a little bit about Troy. He's the CEO and founder of NetPicks Trading LLC and the Backpack Trader. Troy is also known as TJ. He's been the director and moderating host of the Successful Live Trading Rooms. I think I was supposed to skip that part. We've got some background on him. You guys can go and look him up, but he's got more than 28 years of extensive trading experience in Forex, futures, and stocks, and he's passionate about his work, which includes teaching others the art and science of trading. He's created some of the most successful trading strategies and training programs on the market today, and it's used by thousands of members worldwide. And strategies that include 7 Summits Trader, Trend Jumper, Counterpunch Trader, Counterpunch Express 1 and 2, Spotlight Power Trader, and Master Suite, Catapult Trade, and others. He's also the published author of Day Trading Quick Start Guide, which is a #1 best-selling book on Amazon. And he's also currently working on a second title, 4X Quick Start Guide, and it's going to be released soon. So with that, I'll give you the screen, Troy, and let you take it away. Let me just get to that spot. Okay, just a second. Everything just changed. There it is. You
All
can take the
right.
screen now, Troy. Thanks for your patience, everybody.
Thank you. Okay, so please let me know. I think, oh, I see it. All right, great.
There you
Thank
go. I
you.
can see it now.
Perfect. Thank you, Sherry. Thank you for inviting me. Thank you, everybody, for attending. Serge, thank you for a wonderful presentation. I always learn a lot, and you definitely delivered the goods. I'm kind of excited to learn a little bit more about what you're doing. So let me shift gears. I want to talk to you about basically what this slide says, how to potentially maximize your profits in minimal time. I'm going to share with you 7 of what I feel are some of the most critical and essential trading hacks for you to increase your chances for success this coming year. Minimizing time and maximizing profits, that's a backpack trader way, if you think about it. You don't have to schlep a backpack around. It's really a symbol of freedom, and that's why we trade in the first place. So let's stay focused on that, especially going into a new year. So of course, trading's risky. Past performance does not guarantee future performance. Don't risk money that you cannot afford to lose is the bottom line. We're all adults here. Going to move on. So let me tell you a quick little bit about myself, and then I'm going to jump straight to the charts. So I've been trading, as Sherry said, since the early 90s. And I've mentored a lot of people over the years. I actually run a live trade room. I've been running a live trade room now for going on 18 years. And I guess this April will be my 18th year. That's a lot of market time, trading in the markets, following the charts, teaching people how to trade my strategies. There's no substitute for experience. And believe me, I got a lot. And the most important thing that occurred to me in my early years that changed my total trajectory, my career even, were 4 simple words. And luckily they popped in my head the moments the curtains opened on my very first time ever calling a live trade room. Imagine yourself in that situation. Nothing's more scary, maybe going on stage, singing a live solo to people. So those 4 words were lean on the system, because I had a strategy to follow. I wasn't just going to make stuff up. But if I were to deviate from that strategy and then the trade were to lose, I would look like an idiot, completely unprofessional, right? But if I just followed the system, if I leaned on it, it would take all the pressure off of me, because even if the trade lost, it wouldn't even be my fault. I'm just leaning on the system, doing my job, being a professional, right? Because not every trade's going to win. But those simple 4 words, lean on the system, changed my life. And if you don't take anything else away from this presentation today, write those 4 words down and look at them every single day before you start trading. Hopefully you're not just shooting from the hip, taking random trades. Now, you might want to know what I mean by that, and I'm going to get into that next. All right, so let's talk about the agenda a little bit. I'm going to talk to you about how to take advantage of key exhaustion levels. This can really be helpful if trading Serge's strategy, for example. He talked about exhaustion levels. How about knowing the balance of power between buyers and sellers? Or how to avoid whipsaw, and then knowing when to attack. And of course, spending less time, but actually making more money. That's the backpack trader way. I'll tell you how that got started. It's a great story. And then I'm going to give you my 7 hacks that I think are going to help you as well. And then I'm also going to show you one of my best strategies, the Counterpunch Express. I have a new version of it, Counterpunch Express 2.0. I'm going to jump to the charts. I'm going to demo it. I'm going to show you one of the most versatile strategies on the market. And I've got a super, super offer for you. And I hope you stick around to see it, because this strategy has been working for years. And in fact, I'm going to show you trade plans that I use every day in the trade room. And we're just going to look at today's results, because that's how I show the strategy, to show you what happened today. To me, that's the only way to really, show something properly. So let me tell you a little bit about my background. When in my early years, I was waiting for charts to arrive in the mail. I used to fill them in with the Wall Street Journal prices. Anyone remember those days? Type it in if you've been trading that long. One day, let's not even say one day. 3 weeks went by and I was trading crude oil futures. Discount commissions were $50. Imagine that. And I was on a winning streak. I made like 12 grand in 3 weeks. And this is in the early 90s. So that's a lot of money. But then I lost it all in one day. And that was as hard a kick to the stomach as you can imagine. But it taught me so much. And even though it was probably one of the worst things that had happened, it ended up being one of the best things because of the lesson that I learned from it. So shortly thereafter, during that same time period, I made the wife trade. And it's not what you think. I didn't trade my wife, but what I did do was I unwittingly shorted the pound against the dollar at the same time George Soros was breaking the Bank of England. Anyone know about that infamous trade? He literally shorted the Deutschmark, the pound dollar, and he made billions. Well, I took my several $1,000s that I made and I backpacked through Europe. I played drums. I picked up some bongos along the way, started sitting in with street musicians, performed in front of a lot of people, and later found my way to South America to actually visit my Venezuelan musician friend, where I met my wife, and now I have 2 kids, and that was my wife trade. So George Soros made billions, I made a wife. I'll let you decide who had the best trade. Not only that, but the backpack trader was born. I didn't know it at the time, but one thing I learned was that I loved the freedom that I can get from being a successful trader. So I want you to think about that for yourself, because you have to be committed to that idea in order to make it happen. The markets have a funny way of giving you what you ask for. It's just that most traders don't know really what they're asking for. I'll show you how you can really determine and take charge of that. All right, so the thing is that trading is just too darn important to get wrong. And at the right edge of the chart, when you're taking a trade, we really don't know anything, right? I mean, we don't know fill in the blanks. We don't know bleep. So let me tell you quickly about another trade I made. In the early 90s, I was buying Cisco at $20 a share. I mean, I didn't really know what I was doing. I bought it way back here on the left. It looks like hardly any volatility because there were years, not too much longer later, a few years later, there were a zillion splits. And so as it continued to self-adjust, it just doesn't look like much. The cost basis got less and less and less. But I literally sold 100 shares at $30. I made a 50% profit, was really thrilled with my $1,000. Again, early 90s, that's a lot of money. But I didn't know bleep, because had I known anything at all, I might have wanted to hold on to Cisco, because if I would have, that original 100 shares would have been worth $300,000 up in this area. So, winning a trade isn't always the best thing either. And you don't always, what's the thing? No one gets poor by taking a profit. I don't know. I might disagree with this example. I mean, think about it. It's good to know stuff when you're doing stuff, but we don't know bleep on the right edge of the chart, and we have to live there as traders. So here's the thing. That's the consequence of not having a trade plan, how a winning trade can mess you up, how losing can be the best thing that ever happened because you learn stuff. Okay, so when I get to my hot takes, I'll explain that a little more, but losses cause you to focus on what really matters when you realize that we don't know bleep. We just don't. And don't try. I mean, we can make our best guess. We can put the odds on our side. We can prove that a trade plan works for us, right? That we can do, but we can't control what happens on the right edge of the chart. And that's the most important lesson here. So we have to be aware of that and trade with that in mind. So don't take random trades. You don't have to. You can take trades that fit within a trade plan that's proven to make you money so that you can become your own best version of the backpack trader. Does that make sense? So type in the chat box if you're willing to make a change. Are you ready to commit to having a very successful new year? I don't know about you, but I'm happy to see 2020 go. I can't wait to have 2020 hindsight. Put it in the rearview mirror, right? So make a commitment now. Write it down, whether you type it in the chat or write it on a big piece of paper. Commit to being successful and commit to doing the things you can control that will make you successful. And that's what my presentation's about. Fair enough? All right, so let's first get into this, taking advantage of key exhaustion levels. So Muhammad Ali, he would rope-a-dope. You know what that is? He'd cover up until his opponent got exhausted, and then he would come out swinging. That's an interesting concept for trading. That's how my strategy, the counterpunch, got its name. All right, so let's use that to our advantage. There's two sides in the market, buyers and sellers. Sometimes they're balanced. That's when you're going to get chop and whipsaw. Other times, one side takes over, and that's when you're going to get trades to make profit with. All right, so we're going to learn how to identify when one side becomes exhausted. All right, we're also going to learn how to determine the line in the sand, the balance of power between buyers and sellers. Because if we could just stay on the right side of that line, we're going to stack the odds in our favor. And if you think of that line as just being a crocodile pit with hungry crocodiles. You don't want to get pulled into it. You're just going to get eaten alive. And that's typically what happens to 90% of the traders out there. Isn't that true? They typically lose. The crocodiles get them because they're not on the right side of the balance of power. All right, so my friend Confucius, he says, don't get drug into the crocodile pit. I mean, really, he really said that. How to avoid whipsaw and how to know when to attack. Well, that's pretty important. No one wants to trade when it's choppy and when there's whipsaw. A lot of people ask me, how do I do that? How do I stay out? Here's the thing. You're asking the wrong question, because what you're asking is how to not lose. Well, guess what? We don't care if we lose as long as our trade plan wins, because there are losing trades inside of winning trade plans. That is very difficult for people to wrap their minds around, but the winning traders ultimately will understand that, and they realize you can't divorce losing trades from winning trades. When you put the odds in your favor, that's when you will start to make money. So asking the question, how do I avoid losing trades? How do I avoid whipsaw? There are techniques that you can do that at least most of the time, just not all the time. And that's okay, because if our trade plan makes money, we're going to achieve our reason for trading, and we're going to become our own best version of the backpack trader. You can't fight City Hall. Bleep happens. Price action is a price action in the markets. They're City Hall. Can't fight them. We can go along with them. Okay, so, and of course, how to spend less time and actually make more money. Well, that's trade plans. We call it the power of quitting. I don't know if you're aware of my 12 Powers ebook. I'll talk to you a little bit about that. Some of these 7 trading hacks come right out of these 12 powers. Well, the power of quitting empowers you to quit trading because you've hit your goals. And then as you grow your account, eventually you just give yourself a raise by moving your finger from the 1 to the 2. You don't have to trade more. Just trade smart. Trade with a good trade plan that you can prove will make you money. All right, so the power of the trade plan, compounding, and then wash, rinse, repeat. And that's what I'm going to show you today. I'm going to jump to these charts and I'm going to show you trade plans that do exactly that. And these trade plans weren't created today. They weren't created 6 months ago. They were created like 6 years ago, and they haven't even changed. And this is what happens when you have a winning trade plan. I'm going to show you in a moment. I'm going to teach you everything you need to know about the Counterpunch Express, how it works on so many charts and markets, and you'll see for yourself what it does. So let's take a closer look. I'm just going to orient you a little bit. I use candlestick charts. Hopefully you all know that green means up, red means down. These dots are going to tell us when markets are exhausted. You can see the sellers became exhausted down in here and the buyers took over. Here you can see some consolidation where you remember the balanced market where they have equal power. They're both catching their breath. Here you got the buyers becoming exhausted and the sellers taking over. Those 3 dots are, when I first had them created, the programmer didn't know what to name them. He called them Troy's magic dots. I just call them exhaustion dots, but they are kind of magic. All right, and then this is your balance line. And the balance line, when you got bars closing on the long side of the line, the buyers are in control. So sellers are tired, prices are going up. Buyers are tired, bars closing on the other side of the crocodile pit. If you have this information, just this and nothing else, you're going to be 90%, 100% better, 10 times better than 90% of the traders out there that lose. But we're going to do even better. We're going to take that and create rules that we can repeat and follow and lean on the system and take the pressure off of yourself. Does that sound fair? Hope you guys are into this, because I am really excited. Even though I've been using this for so long, it's like the first time every time I see it. I even get goosebumps when I start talking about this. So let's break this down even further. I'm going to jump over to my charts and I'm going to reconstruct this. This is in last week's crude oil inventory report. Every week there's a crude oil inventory report. I record these sessions, put them on my YouTube channel all the time. I've been doing it for years. Same trade plan. If you learn this, you can trade just about anything else. Options, stocks, Forex, day trade, swing trade, doesn't matter. All right, so what I want to first ask you, when you look at this chart, it looks terrible, doesn't it? I mean, here's where we have to make trading decisions, right? So the trade plan says at 10:30, after the report comes out, wait 2 minutes and then start looking for trades. So I'm going to show you what happened. We had one today as well. I just didn't have time to mark up the chart. Today was a winning session too. So I'm going to show you everything else was going to be other charts, but this is a really good example of teaching how counterpunch works. So I wanted to stick with this because I put a lot of time into marking this up. Look at what happens when we add the exhaustion dots. Does that kind of give you a little more information when you're at the right edge of the chart? Kind of. I mean, you know that the buyers are tired, right? So maybe we're going to start thinking about going short. But what about when we add the balance line? Not only do we have tired buyers, but now we got price action. Price action's king. That's City Hall closing below the balance line. So the odds are this market's heading lower, but we're not just going to go short. We need to have a reason more, and we're going to have price action itself confirm our assumptions. All right, so I'm going to jump ahead. I'm going to talk to you about this histogram in a bit. This is a high trend chop indicator. It indicates where the market's choppy. It shows you the trend on a slower chart, so you can get the fast trend on a slower chart, and we could use that for extra confirmation. But the real thing I want to show you is the calculator, is a proprietary indicator that takes what I've taught you already, exhaustion, balance line, price action confirmation, and a real smart algorithm that measures very accurate targets, and it prints the trade right on the chart for you. So now we know we're going short. You see that? The little plus sign below the bar, that tells us we're going short. If it's above the bar, we'd be looking to go long. All right, so the first objective is to get to target 1. Now target 1, first of all, these trades are self-adjusting. They're tuning to market conditions. So what you're going to see when you look at, when I show you more examples, is some trades are bigger, some trades are smaller, because the strategy itself considers City Hall in charge. It literally considers the market a dance partner. It tunes itself. It dances with the market, and the trade you get has been tuned to that exact moment in time, in real time. It's amazing to witness this. Remember, this has been going the same plan for many years. Wait till you see what I show you. So what happens is, remember, we have to wait 2 minutes. So this is all right when the report comes out. We're not interested in this trade because we have to wait our 2 minutes. But I want to use this to explain to you our trade plan. All right. So the first objective is to get to target 2, and then we could take a position off, and we're going to move our stop, which is up here, and we're going to move it down to break even. Okay. This one went up a little bit. There's some adjusting going on. I'll explain that in training, but we know our stop is going to be at break even, and you'll see that in most cases. All right. You could also take profit at target 3, and then of course the trailing stop will move down for a bigger move quite often. So you could hit the home run trades. That's great, especially when you're trading Forex or options. Wow, you can make a ton. I'll show you some great examples in a little while. All right, so now you understand the entire strategy. When we get to target 1, we're moving our stop to break even. That's our first objective. When we get to target 2, we're taking profit. That's our profit objective. Power of quitting. If it goes back up and stops out at break even, we're done. If it goes down and makes more money, great. When the trade's over, we're done. Power of quitting, mission accomplished. And if you do that every day, you're going to win most of the time, not all the time, and you're going to grow your account, and eventually you're going to move your finger from the 1 to the 2, and then the 2 to the 3, and eventually faster, as the exponential curve kicks in, as you grow your account, you'll get to critical mass and the size that you want to trade, depending on the market. Make sense? All markets are different as far as liquidity, but crude oil can handle quite a bit. You can see over 200,000 contracts traded today so far. All right, so let's see what happens 2 minutes after the report came out. So we have a possible long, a possible short. Now at the right edge of the chart, we got to make decisions. But guess what? The entire trade is right here for you. Your entry, your targets, your stop, how much your reward is in ticks, and your risk and risk reward ratios. It's all there for you at a glance. So you know how much to put on the trade. So this one is going, but 2 minutes haven't passed. Look at the clock. We're still waiting 2 minutes. So while this is a trade we might be interested in, we still have to wait our 2 minutes. Why? That's the trade plan rules. So the trade does get short, but we're still flat. But then 2 minutes happens right here, and the price comes up, and we get filled. So now that's a live trade. This has been recorded. It's on my, I have it on YouTube. This is lots of traders in my trade room trading this with me live, like we do every week. So we know what to do. We don't even have to think. Guess what I'm doing? 4 words. I'm leaning on the system. That's it. No pressure. I got the right risk. I got the right trade. I know what I'm doing. I got a proven trade plan. It comes down, hits the target 1. The stop moves down. Break even. We're moving our stops to break even. We're starting to trail. Takes profit right at target 2. Look how accurate that bar stabbed right down to it. That's it. Power of quitting. But we still got more positions. There goes target 3. Look at how accurate that target is. Remember, these trades are tuned. This trade is a different size than the one before. And then the market goes up and stops out. And that's it. We're done. It's a 3-minute trade. We've hit our goals. Counterpunch Trader Express. That's it. One and done until this week. I could show you this week, but it wasn't that interesting. All right. What I want to show you is how this works on other markets, the exact same strategy. All right. So let me do that. Let me first, I'm going to jump over to this here. So I got a bunch of different charts. This is what happened today. The Russell we do in the trade room, and you can see nice winning trades here, but the trade plan starts right at 8:30 Central Time. So let's find that. This was today's trade for our trade plan. Right there, 8 minutes after the market opens, it gets short. I don't need to teach you anything new. You know that it's going to move to break even here. When the price gets there, we're going to take profit at target 2, at target 3. Well, guess what? This hit its goals with the very first trade. That's it. We're done. We don't need to trade this anymore. Move on. Go enjoy your day. If you want to trade more, you can just trade a different trade plan, and you can swing trade. Are there any DAX traders? DAX futures are amazing, especially if you're a night owl and you want to trade in the middle of the night, or if you live on the other side of the world, because at 9 a.m. Europe time, roughly 2 a.m. New York time, the DAX future starts trading. And guess what? I'm not showing you anything new, only that it's a long trade now. We're above the balance bar. Sellers are exhausted. There's your trade. There's your entry. Notice you're reading it up now from entry to targets because we're going long. So this is designed so that you minimizes errors. You know what your risk is. This is in euros. These are ticks. 2 ticks per point. 1 point is 50 euros. So look at that. We hit target 1, break even, target 2, 37.5 points for 1,875 euros. 2,500 euros. Look how accurate. It just missed by 1 tick, target 3. But look at the stop. It was also accurate. It kept us in the trade, pushes higher, hits the profits, and then trailed up and trailed more and more all the way up to here. And that was good for 4,700 euros just on the trailer. I mean, that's one trade, guys. I mean, that might be a little too rich for some traders, but you build up to it little by little. You start with 1 position. As you grow your account, you give yourself a raise. Now you have 2 positions. You can go to the 3rd target. And it doesn't have to be the DAX. It can be a number of things. But notice it's the exact same thing that I just showed you. There's nothing new to learn. You guys know the Counterpunch Express. Let's look at some equities and options. All right, so equities and options. I have to go quickly because I got to show you how you can get this, but I wanted to pull up the spider and show you how I trade options. All right, so imagine this trade on the right edge of the chart. You click on the bar, you got the whole trade, and all you got to do is buy slightly in the money call options. That's it. So if the entry is at 318.8, well, maybe you buy, I got it at 314. So it was almost at the money. Maybe you buy it, slightly lower. Anyway, it doesn't really matter. The 314 calls made 37%, 65%, 112%, 121%, and then stopped out right there. And the thing is, you're buying options far enough out, so even when you have a losing trade, you can just sell the option back. You'll take a loss, but you'll also recover some premium. So when you think about the risk reward ratios, when you trade like this, simple directional trades, you could do call long spreads, you could do bear spreads the same way, like Serge told you, using this exact same technique. I just like straight calls and puts. It's really simple. And I got my stop and I got everything defined, my risk, everything. Going forward, we had the COVID crash. So it caught some of it. It made some money, but the targets were so large because of the volatility that instead it ends up stopping and reversing. And you're taking this small little loss right here. The stop was up here, but then it identified the change in direction. And so you take the small loss and instead get long. And that one makes, $13.66 on the stock price. So you can imagine that's going to be, 50, 60, 70% on simple options. And then look how accurate the target was before it headed lower, and then the short. And you could scale out, again, different size trades, but look how it tuned itself and gave a perfect target, targets 1 and 2 before stopping out to get long. And look how much bigger the long trade is and how accurate that target was before it started heading lower. That's how you trade options and equities with the Counterpunch Express. And the whole thing is right there for you. It's all there. So let's just take a quick look at a couple more, and I'll show you a little Forex, and I'll show you how you can get this. All right, so this is the Qs, and I just wanted to show you, this is introducing a bonus indicator that works with Counterpunch Express. This is a trend mode indicator that I'm including at no extra charge. It's like, I don't know, a few $100 extra. Basically, you only trade in the direction of the trend. So red means only shorts, blue means only longs. And look at how many trades. 10 out of the last 11 trades since March, 9 winning trades in a row. You can just follow it all the way up. I didn't mark up all the profits. You wouldn't have had time to read it all anyway, but each trade, the stop is well placed and then it trails up. Like if I made this bigger, right, you would easily see, notice the small trade, notice the big trade. Notice the small trade was pretty darn accurate before it started heading lower, right? It's tuning itself. It's giving you these great trades. Look at Target 2. I mean, how does it get more accurate? How does it know that? And this is all happening in live time. Another nice trade. Look how accurate that is. It almost got to Target 3. I mean, give it a break. I mean, that was really well projected. Just barely missed. It hit the big key level of 270. But we're protected. We're taking profits at these earlier targets, and we got our stop in place. So a losing trade. But guess what? Remember what I said, only go long when it's blue. That saves this trade. It's not a losing trade at all. It's just a non-trade. You just ignore it and instead get long and win. You see, because we're in trend mode. Blue means long, not short. Pretty cool, huh? Look at that one. So then finally, this is COVID. You could see it. There weren't any trades to take for us. That's okay. We don't have to catch every move. That happened really fast and really violently. But look at this, perfectly poised, another perfect trade. Look how accurate that target was before it stopped out. I mean, I don't know. This is the one losing trade. Remember I said it won, what, 10 out of 11? There's the one loser before winning again. And look how accurate that target is. I don't know. I can't write the script any better. There's a new trade setting up just from 2 days ago right there. And you know what it is? You could buy simple call options somewhere maybe at 308 and buy with enough time so that you could take advantage of the move and not lose too much on time decay. I always like to go like triple my average hold time. All right, so let me just quickly get into Forex. I just got to show you really quick that Forex is awesome as well. This is we're using with our Forex alert service, and this is one of the trade plans. It's the exact same plan I just taught you. You can just see finely tuned targets, everything for you. You can put on micro, mini, full-size lots, tune your position size appropriately. This is the current trade right now. We already took profit for 139 pips. We got our stop here. We're holding out to try to get another target. I mean, remember what I said, lean on the system? I just taught you the system, and you could see why I want to lean on it. Hopefully you'll want to lean on it too. This is what it looks like on Thinkorswim. Actually, now Thinkorswim has it tracking. You see the stops moving. This is the CPX1, but 2.0 now actually works almost identical to what I just showed you on TradeStation. All right, so these are the 7 hacks. And unfortunately, this is meant for a longer presentation, and I just felt it was more important to show you the charts and the strategy. But if you prove it to yourself, you can believe in it, you can take the trade. If you have a trade plan, you can believe in it and you can lean on it and be successful and make money. Become your own best version of the backpack trader. You learn how to control what you can control, and don't try to fight what you can't control. You can control creating a trade plan and proving it to yourself and then executing it properly. What you can't control is whether that trade will then win or lose. So don't try. The odds are on your side and you have the right risk, it doesn't matter. All right. And then of course, lifestyle. Remember, power of quitting. You don't have to spend all day in front of your charts, nor should you. Trading is supposed to give you the lifestyle you've always felt you deserved and wanted for yourself and your family. Make that a rule. Okay. And then the 2% rule. 2% rule means never risk more than 2% of your risk capital on any given trade. How do you figure that out? Well, you have an entry, you have a stop, you know what your amount you're risking, so don't put on too large of a position. 2% only on trades that are proven, that you've proven it to yourself in your trade plan, because that is your ticket to making money. Those are your keys to the kingdom, you guys. Einstein, we're not going to argue with Einstein. Power of compounding. The 5% art to trading. I don't have time to get into that now, but I teach it in training. But basically, we make little adjustments around chart levels. So that's something we don't program because our brains are better at it. There's a bonus hack as well. And basically, it's consider yourself the CEO of your own trading business, because then you'll be professional. And that'll help you stay on track to just leaning on the system. Understand? So I've got a few minutes left. Now, if this were a longer presentation, I would get into these hacks in more detail, because I got some really cool stuff to show you, but I don't have time. But I taught you the strategy. I will teach you this too. I mean, look at that. These are all from Counterpunch. But we'll get into that maybe another time. I do a lot of these. I want to jump straight to, well, hundreds of testimonials, CPX. Great. I'll let you see the video when it comes out if you want to read what these testimonials say, because I think what's more important today is that I show you how you can get your hands on this. I've got a great deal for you. Let me just get to it. All right, so what you're about to uncover. The complete method I just taught you, okay? You can put it on any TradeStation chart, NinjaTrader 7 or 8, MetaTrader, and Thinkorswim. Those are the platforms it works on. All right, and you could you don't have to worry which one. It's going to work great on all of them. And then I upgraded the Counterpunch Express to the 2.0. You saw it tracking the trades and moving the stops and the key information in the data window. That's all upgrade stuff. Okay, that's the control panel, gives you at a glance structure. That's one of the 12 powers, the power of structure. You see the trade right on the chart. All you got to do is lean on the system. You have all the tools to prove it to yourself first, so you can believe in what you're doing. Trust me, when you've traded like this, you cannot imagine trading any other way, or how you even manage to. You get the high trend chop filter. The one I showed you shows you the fast trend on the slower chart, so that you can stack more odds in your favor. And it even shows you when the market is in choppy waters and rules to follow to help reduce losses, not eliminate them, but reduce them. And that adds a lot to the bottom line. And then obviously something that's been working for years, proven, all the indicators that I showed you, you get them all. Lifetime license. Pay once, you own it forever. TradeStation, NinjaTrader 7A, MetaTrader 4, Thinkorswim. Nuts to bolts, video-based training and support materials. This is one of the best trainings I've ever done, and you get access to all of it. It's all on the member site. You can access it as long as you want, unlimited. The trend mode indicator. Go short when the line's red, go long when the line's blue. You get that, okay? And then trade plans, trade plans, trade plans. I'm gonna teach you how to chase down your own ideas, because if you do it yourself, you're gonna believe in it more. But I have so many great trade plans already done for you, and I'll teach you what it takes to believe in those as well. You might just wanna do what I just showed you. I just showed you basically the same trade plan on all those different charts, didn't I? So you get that. What else? So Counterpunch Express. How much you think something like this should cost you guys? I mean, I've sold the full Counterpunch Trader, the bigger brother of this, that has loaded with just tons of stuff, bigger learning curve, exact same trades, just can do different things on a more advanced level. That's like a $2,000 strategy. The Counterpunch Express 2 is its like little brother, okay? And guess what? I'm going to give it to you guys for the one-time cost of just 497 bucks. I mean, literally, that's like one trade, maybe two. If you're trading the DAX, it's like a tenth of a trade. And you own it for life. Everything I just said. But guess what? I got more for you. Here it shows what I used to sell it for $997. It's got probably 12 grand in value because of what I'm about to show you, which you also get. $497, you own it for life. All right, so some of the things that obviously this just kind of repeats what you get, right? All the indicators, everything I just said. This is your URL, netpixtrading.com/CPX2/order. Okay, there's also a link in the chat box that you could just click on it. It might be even a slightly different link, but it's the exact same offer. All right, so just click on the link and you can go straight to get this CPX2. All right, I hope you get it, because guess what? There's more. I'm going to give you free access for 30 days to our crude oil inventory report. You can join me, learn the basics, and learn how to trade this amazing strategy that has been winning for so long, and basically trade it with us live in the trade room for a full month. All right, and that's no extra charge. Not only that, I'm gonna even sweeten that more. Okay, but you can ask questions, you can learn it in live time. There's no better way to learn a strategy than with the guy that created it in a real market, seeing it over and over again, practicing until you get it right. Okay, so not only that, here's another look at the crude oil report, another session. Look at that. That was back in 2016. Here we are in 2020. It looks the same. It is the same. Hasn't changed. That's got to say something to you. Something that stands the test of time. They don't exist. They're not easy to find. This is an evergreen strategy. This is what another crude oil report, this time also in 2016 in February, and this is on NinjaTrader, so that you can kind of see that it works the same. Nothing new to learn. It's all there exactly how I showed you, just a different look and feel. Everything functions perfectly on NinjaTrader. Some more testimonials and another bonus for you. For being here today, I'm going to throw in what I think is one of the most important tools, and that is the Ultimate Trade Analyzer. This is a pre-programmed spreadsheet. I will teach you how to log your trades, build your trade plan, build your belief, and create something that will make money for you from now until forever. Just got to follow the training, and that's yours for free for joining. You get to see, this is the equity curve of the DAX back, I forget when. I showed you the trade from today. You can see why it keeps going straight up. The Dowie Mini, and I'm almost out of time, so let me just quickly show you 497. When you add up all the value, it's a lot, but I'm also throwing in more. I'm going to give you a multi-computer license, so you could use it not only at home but on your laptop, as many computers as you need, no extra charge. I'm going to let you have all the platforms, so if you want to go TradeStation, MT4, Thinkorswim, Ninja, no extra charge. You get free license to all of it. And then my 12 Power of Successful Trading ebook, and the no-brainer guide to trading success, even though it's on the bottom. That's one of the most important trainings that you can ever do. It ties in the UTA spreadsheet, everything I taught you, and if you follow it step by step, you make these two books your trading religion, and you've got the Counterpunch Express 2, you are going to be better off than most of the traders out there, and have a program that's going to be there for you for the rest of your life. You learn it once and use it for a lifetime. Sherry, I don't know how much time I have. I believe
You're
I'm
like
kind of at
1
the end.
minute.
Oh, imagine that.
1
1
minute
minute.
to
Look, I don't know if I have time to answer questions. I wish I did, but Sherry, if you could please share my email and my
go. All right.
link. I always answer emails. I'd
I
be happy
shared
to
your
answer.
link and I'm grabbing your email now, but also everybody knows that they're going to get email from you after this. So if you've got something to follow up, so they've got that thing one last time after it's over with, that's cool too. And this was fantastic. Troy at backpacktrader.com, right?
You got it. Thank you. I want everyone to
There it
become their own
is.
best version of the backpack trader, get that freedom from trading.
That sounds good. I love that you made a wife. I hope she doesn't take exception to that, does she?
Oh, she's thankful. So, as we both are.
All right. Well, thank you so much. This was fantastic, folks. I hope you take a great look at this and get on and get in there. There's so much there to take advantage of. So thank you, Troy. And I hope you'll come back and join us again in the future. And happy trading to you, sir.
Thank you, Sherry. Thank you to all my friends at Traders Exclusive, and I look forward to coming back again.
Thank you very much. Bye-bye now.
Bye-bye.
All right, folks, I just want to remind you that we do have a recording that will go up at tradersexclusive.com/archived_, you can't see it with the underline there, webinar. So we will have that replay up there if you have to leave. We've still got 2 more great speakers for you. Our next speaker is Mark Sebastian of the Option Pit. He's going to talk to us about how to profit from the mother of all trades, volatility. Mark is a former market maker on the Amex and the CBOE. I see you, Mark.
Hey, how are you?
I'm great. How about you? I'm glad you could join us. So let me.
Excited to be here. This
You
is
have
fun.
the shortest bio of all today. So,
Yeah, well, I pack a lot in short bio.
you're
So,
the founding partner and CIO of Carmen Line Capital. It's a
yep.
volatility arbitrage hedge fund. Also the founder of OptionPit.com, which is a full service options mentoring and consulting firm, which works with
Yep.
traders, money managers, and hedge funds on option strategies. And I checked your website and I can see that you're also Jim Cramer's volatility guru.
Yeah, that's true.
So I'm gonna make you the panelist. I already did that, right? Okay, so I'll stop talking and give you the
You need to make
screen.
me
Maybe I
the
didn't.
center, I
You
believe.
know what? Yeah, I have you twice here. I wonder if I'm gonna make the right person the presenter.
Well, the one with my
The one
yeah.
here. Okay, I think you can do it now.
Go. Yeah, now we can do it. So, hey, it is good to see everybody. I'm excited to be here. I want to thank Traders Exclusive for having me. We got a lot to go through. I'm going to go through some pretty important information. We have a lot to cover. Oop, not the right button. We have a lot to cover. And obviously, before I begin, I want to remind everybody that today is for education purposes only. It is not for investment advice, not legal advice, not tax advice. I'm here to teach you about volatility and about the shift that's changing the world. But what we're talking about is education. So if you hear something I say and you go out and do it, and you lose some money, that is your fault, not me. So let's talk about what I call permanent volatility. And this is the shift in the VIX. Things have changed, I think, forever. So let's talk about what we're going to hit on. All right, I'm going to explain why the trading world is now forever changed. Things have shifted, right? Then I'm going to get into why there's a new whale on Wall Street, a new whale trader. All right, on the floor, we used to call the guys that come in and sling 10, 15, 25,000 contracts whales. Well, we have a brand new whale in this market, and they are shifting the way everything works in the VIX and in the option space. Then I'm going to show you my professional system that I use to manage and trade volatility trades that are consistently profitable. So this should be a lot of fun. We have a lot to cover. Now, before I get into that, let's talk about my favorite subject, which is me. Now, as Sherry said, I was a floor trader. I started out in New York, and then I moved to Chicago, traded on the Amex and the SIBO. I was with the firm that actually made the very first VIX trade. I was sitting there as the VIX options were being developed. So you're dealing with somebody who was in on the VIX at the very ground floor. And so that puts me in a very unique space in terms of people that are actually willing to come out and talk about what I'm about to present. There are about 2 or 3 people in the world that can speak to the VIX the way I can, all right, that are willing to talk about it. So there is only one trade, all right? There is so much volatility in the world right now. You've got COVID causing all kinds of volatility, right? We just had the Fed come out and talk, and their policy is shifting, right? That is adding and changing volatility, right? Janet Yellen, the queen of the helicopter cash, right? She runs a helicopter that drops cash on the market, is going to be the Treasury Secretary. All right, you have the economy. All right, we still have a president that can move the market with one tweet. All right, we have elections in Georgia. We have, an election cycle that seems to never end. All right, and then we have a brand new whale trader, all right, that is entering the marketplace, and they are sending volatility all over the place. Listen, we've had more volatility in the last 10 months than the last 10 years. Think about that, all right? We've had the VIX above 20 since February. We've had the VIX hit all-time highs in the last 10 months. Now you can say, oh, theoretically in 87 it would have gone up. Since they started trading the VIX, it has never been as high as it was this year. This is a market that very few people have seen. Does it remind me of 2008? There's some strokes to 2008, but this is very different than 2008 because of what's caused it and this whale trader that has entered it and is changing it and is really presenting me and you with opportunity that we've never seen. All right, VIX right now, 22. It's unbelievable. And this is why really the only trade professionals are turning to is volatility, because really nothing else has worked, right? Traders that want to survive need to trade volatility, right? You can close your eyes and press buy in the S&P 500 and hope that what's happened over the last 6 months keeps happening. But over those periods of time, you're going to see the S&P drop 200 points. You're going to see the S&P drop 300 points, right? You've got to have a pretty thick ironclad stomach to deal with equities right now. VIX and volatility are totally different, right? Volatility has been one of the simplest, easiest, consistent trades over the last 10 months, and there's more to come. So today, I'm going to show you how to make money with this, what I think is permanent volatility. What we're seeing now, I don't know that it's going to disappear anytime in the next 6 months. So let's start with, what is volatility good for? You know, and the answer is volatility helps me see things before they happen. All right. You remember February 24th of 2020, right? That was one of the ugliest days in the last, I don't know, 5 years. Well, I went on TV on Bloomberg the previous Friday and said, hey, Monday is going to be a wreck. There's no liquidity out there. And the woman who was interviewed said, what do you mean? You know, the Fed's pumping in liquidity. I go, yeah, but there's no option or stock liquidity out there. Nobody wants to make a market. And we could see this happening. And how? And the answer is volatility. So this is actually a statement on March 3rd from my fund. All right, this is from my hedge fund. And I want to show you the carnage that had happened over what amounted to about a week and where we were able to turn up. So as of March 3rd, you can see the S&P in a very short period of time had gone from up on the year to down 7%. The Dow was down close to 10. The Russell was down 11, and so on. Meanwhile, we were up, all right? Not because we put on some big trade, but because the big trade we put on was taking off a trade, all right? We used volatility to see a major meltdown that was forming. All right, so at Option Pit, we use our VIX traffic light to tell us what's going to happen. It's a proprietary signal, and I'm going to tell you in a little bit what goes into it. But we use a proprietary signal that tells us when VIX is saying, hey, look out on this market, all right? And the traffic light works this way, all right? When the traffic light is green, it's telling me that VIX is going to go up, or when it's green for the S&P is going to go up. When it's yellow, which we were for a big chunk of like April through July, it's saying, hey, we could go up or down. We're going to see some swings. Use caution. All right, trade the market. Don't just pile into this market. All right, and red means it'll go down. All right, so right now the VIX is red and the S&P is green. All right, but it's moved around a lot. So now let's go back to February and I'll show you kind of where the signaling worked. Here is VIX, or excuse me, here's the S&P. Start with the S&P. All right, so the S&P, and this is February 15th. We're nice and green. All right, on February 20th, all right, on February 20th, the day before, really this all begins, but I marked the 20th as the first official day. All right, if you go back to the February 20th time machine, something that happened was, you know, the market was down about 10 points and a big, and I mean big futures trader came in and sold about 100,000 S&P E-minis. And if you see this big, huge red candle that my yellow line is pointing toward, you can see the price action that big sale caused. We went from down about 10 to down about 50 to back to about 10. But during that period of time, volatility shifted as well. And volatility, unlike the market, did not recover in the same way. We got our yellow traffic signal. So what I did was I pulled my position into cash. The next day, we got a big sell-off. We got a gap down about 20, sold off another 20 points. But volatility made a massive shift. And my signal went red, which meant, hey, you know what? Don't think that this is a buy the dip opportunity. It's not. And the next day, that Monday, we came in and it was bad. Right? Markets absolutely tanked. All right, and I'll show you, while everyone was getting wrecked by this market, I was sitting pretty. And the reason being is I had the VIX working for me. That buy the dip that had worked so much leading into that was just, VIX was saying, don't do it, Mark. And so I didn't. All right, so my indicator that I'll go through in a little bit was saying, hey, it's different this time. Here's the VIX. All right, same thing, right? Kind of the opposite, right? When the market tends to go up, the VIX tends to go down or be flat. So we were red mid-Feb. We went yellow on that Thursday and green that next day. And VIX blew higher. All right, so I'm going to tell you what we did. Exact trade. All right, when our traffic light tripped, we sold our long position on February 20th, and we bought just a little baby VXX call spread on Feb 21st, using about 1% of our portfolio, just a tiny little taste. And it created about 1,200 points of outperformance over the Dow. And I'm continuing to beat the Dow pretty handily as the year is going through. This is in my fund. So since the COVID collapse, markets have recovered. They haven't just recovered. They've gone to new all-time highs. But the VIX is still over 20. So something doesn't add up. Something is different. All right. What is different? And the answer is this new whale. And this new whale trader is not who you think they are, because they're not sitting in an office like I am calling out trades, right? They're not on the phone in some big Wall Street trading desk buying up this market. They're on this phone. They're on this phone. And they're trading in Robinhood, in Gatsby, in Doe, in all these online phone trading apps, gobbling up volatility, creating swings. All right, there's this thing we call the vol feedback loop that has been created by Robinhood. All right, and I want to show you this whale. All right, so by the end of the year, all right, their 10% of all trades will be one lot orders. Think about that. 10% of all trades are going to be somebody probably on their phone buying one option. But here's the thing. They're all doing it together, piling into the same stocks, right? They're piling into Airbnb and DoorDash and Palantir and Neo and Tesla and VIX and VXX. And they're all trading in the same direction. And it creates this cascade of volatility that has caused the VIX to hang out above 20 for far longer than it ever should. All right, the market, if you look at how much the S&P is actually moving, the VIX should be like 14. It's 23. And it is because this whale has stepped in and is buying up everything. SoftBank has nothing on a 23-year-old on his phone. You know, brief example, I'm on a call with a couple of my partners, and I've got, I just moved to Austin, Texas. I've got a couple of kids hanging up pictures and setting up flat screens for me in my new house. And they pull my wife aside and say, hey, is that guy talking about options trading? My wife's like, yeah, he runs Option Pit. It's a, an education company, helps traders, learn to trade options and become really good at option trading. And he's like, wow, that's awesome. I just opened up a Robinhood account. My buddy made $100,000 investing in Tesla. This is the mentality of those traders. They buy up, gobble up volatility, and it causes the market to move. So let me show you how these whales work in just the VIX itself, right? Prior to COVID, normally VIX, which is traditionally a hedging vehicle, would see about 1.5 calls for every put that traded. These Robinhood traders are stepping in, going into the VIX contract, gobbling up put premium on out of the money puts in VIX. And it creates all kinds of opportunity that I've never seen in the product. Trades that I've never seen. It blows my mind, the opportunity in volatility that is there right now. Brief example. This is a screenshot from yesterday. There were 1.5 more puts purchased on a day the VIX was up than there were calls. And it was all VIX D23 puts, which expired this morning, and the 22 puts, which expired this morning. The VIX settled 23.15. All of these options that were purchased went out worthless. So I'm going to walk you through some secrets on how we can use volatility to do extremely well. All right. Secret one, traders with a small amount of money can do well trading volatility. You don't need a ton of dough to do what we're going to do. All right. Then I'm going to walk through how cash is not a position, how bonds maybe are a position. All right. And how volatility is really the only thing that's out there. Then finally, I'll show you what I'm doing right now. Secret one, you don't need a hedge fund to trade VIX. You don't need a hedge fund to trade volatility. You can make big gains, all right, using small capital. Remember, I use 1% of my portfolio to create a nice chunk of that excess gains, right? I use VIX to get me out of the way of some long equity, and then I used VIX to get me long volatility. All right. I can use small dollars to win big. So when my light is green for VIX, I fire off a lot of trades, a lot of little trades that can get a pretty decent return in a short period of time. And when my light is red, like it is now, I still see a bunch of trades. All right, I've done 2 trades this week. Robinhood traders, Robinhooders are amplifying the moves in VIX and VIX futures in ways that we just haven't seen in a while. Here's a real simple trade that we did in middle of November, last month. All right, we bought to open a VXX November 13th, expiring on November 13th, 21.5 put, and we paid $1.20. All right, with a 122 top. So this is, when we put out a trade, it goes into our subscribers' emails, and they also get a text alert. Speaking of the phone. 4 days later, we sell the close VXX No 21.5 put at 253 with a 250 low. You do the math on the return there. Not bad for 4 days of work. Those are the types of trades, and here's where we are. So when I'm trading volatility, all right, I'm looking for not to, catch the falling knife, all right? What I'm really looking for is to slam that knife, right? It's like tetherball, right? When the ball's spinning in my direction, when I'm winning tetherball, I want to keep slapping that ball around the pole. That's the way we're able to use volatility. When that light is red, it's saying, hey, keep hammering it. So rather than catch that falling knife, I watch it go by and then I put my hand on the bottom of it and slam it harder. So we bought here, sold here. That's simple. The light is my guide. Our traders are the difference. So I'm going to walk you through what goes into this light. But having a professional like myself that is basically sleeps, eats, and breathes VIX does make a pretty big difference. The more you know about the market, the more you realize how things can absolutely fundamentally change. So we saw TVIX going away before it went away. Right? One of the things that I think is valuable with a person like me is I watched TVIX blow up and I said, this thing is going to crash lower. And we got everybody in our, at Option Pit in a room and said, hey guys, look out for TVIX. And it almost had a collapse of 80% in a single day. It was within that much of going out of business overnight. Instead, it took a little longer. But if you want to know why it got shut down, it's because it was so close to completely blowing up. Credit Suisse did not want to deal with the risk. All right. This is kind of the value add that I'm able to bring to something that's simple, like a traffic light. Secret 2, what good is cash if you don't know what to do with it? Does government debt or gold or owning dollars really work as a buy and hold? Well, you tell me. Let's go back to 2008. Take a look at bonds. This is TLT. Didn't do so hot. All right. Blew up, blew down. All right. And frankly, I think we're about to see another blowdown in bonds. Gold. I mean, think about this. People look at gold as safety. Did that give the investor any safety in 08? No. Gold is a cruddy safe haven. All right. It's an interesting investment as an inflation hedge, but as a market hedge, as an S&P offset, it is a terrible hedge. Why? Because when the market goes to hell in a handbasket, people liquidate gold, which is generally doing better, to produce cash for their positions. It doesn't help. All right, and then looking at cash, same thing, right? Cash spikes up, cash goes right back down. Doesn't really do you a lot of good. All right. Trading vol will. And having our signals helps us navigate these pops and drops in vol. So can we use volatility to call tops and bottoms? Yes, I've done it on national TV. So I'm going to show you two examples. This is me on a Friday calling the limit down that took place, I believe, on March 1st. All right. And why? Volatility. I could see the paper flow. I could see the VIX flow. I could see the VIX action. And my traffic light was saying, whoa, look out. And at the same time, you know, as you know, I'm Kramer's vol guru. Anytime he has questions about VIX, I get direct emails from him. All right. And I will say this about Kramer. All right. His emails are exactly the way you would think they would be. He uses a font about yay big in red. Right. But this is in 2015. All right. After the whole Chinese debacle of 2015, right? We're at a bottom. We're at a market bottom, and I'm telling him, you know what? We're going to keep going higher. We're through this. And we went straight up for a couple of years. So when will things feel normal? I think that's the biggest question I get from people, right? When is this market going to feel like what I'm used to, all right? And it's not going to feel normal until Robinhood traders disappear. Don't see that happening, or volatility collapses, which I don't think can happen until the Robinhood traders disappear. What we're going through right now is like 1996 to 1998 for stock day trading. That's what's happening in the option market right now. All right. We're in a new normal for a very long period of time. So now you want to know what goes into my traffic light. I'm going to tell you it's 4 indicators that talk to each other. And I'm going to tell you what they are right now. All right. Number 1, when there's a change in the severity of VIX moves, when VIX starts moving more or less, that is our signal. That's one of our signals, right? Less important, but important. Now, the next one, probably our second most important indicator, a change in volatility correlation. And by that, I mean, over time, the VIX tends to drop when the S&P is going up, and the VIX tends to rally when the S&P is going down. When that correlation changes, when the VIX starts to go up with the S&P, that is a very important piece to our indicator. All right. Now, when VIX option volatility starts changing, all right, we look at VVIX. When VIX option volatility starts changing, that to us is a big sign. And finally, and this is our most important one, and I'm going to dig in on this a little bit. When the volatility futures give us the all clear or the look out, that is the signal. And I'll show you. You can go online and look at volatility futures, and they'll tell you some things. So this is what we call a contango. This is a normal volatility market. Traditionally, in the past, VIX is in this formation about 80% of the time. Right? This is what we call a flat curve. Right? This will produce a yellow or a red light, what you're looking at right here. And this is what we were looking at in February when I went, hey, whoa, something's not right here. And this will produce a yellow, it can even produce a red. This is a flat curve. And then finally, this is called backwardation. And backwardation is a screaming green light on VIX and a screaming red on S&P. We went back. Now I haven't done this in a while, but we went back prior to the beginning to this year, and we looked at your performance in the S&P. If all you did was get out of the way and go to cash when the VIX went backward, and the outperformance of that portfolio to the overall S&P was astounding. It was astounding. So the key to spotting any major market change, the only true tell is that volatility. That's when we know to cash, or when we know to trade, or when to go long. All right. We've been pretty substantially long through a lot of what's been going on. All right, since September-ish. Right now, secret 3. You want to know what I'm doing right now. All right, for starters, with the VIX as high as it is, I'm trading small, even smaller than I normally do. When the VIX is moving around like this, when it's in the 20s, when the market's in the 20s, throttling back the size, I can make as much as I do when the VIX is 12 or 13, trading bigger. I can make more. So when vol is high, I'm using fewer dollars. All right. And this is just, this is the nicest endorsement I ever got. And I want you to know this is how I feel about all of my clients. All right. And it says, Mark, I must say I'm liking your personal management of our trades to squeeze out profits. I don't know of any other service that is this meticulous as I am about my money. You treat my money like it's yours. All right. And it doesn't quite work that way. I'm not managing his money. He has to do it, but I'm on top of things, right? I sit here and stare at the screen all day. As I'm doing this presentation, I'm having to sneak over and look at what S&Ps are doing. Can't help myself. All right, so here's my trade through this cycle. All right, so we started out in February 2020 being long vol, long VIX. We rode that through April. Then we started trading short vol as TVIX blew up and then down. Now we're trading the volatility up and mostly down. We catch the updrafts, we trade heavily the downdrafts. We're taking advantage of pops and drops. Taking advantage of pops and drops. All right. So I'm going to talk about the volatility edge, and then I'm going to talk about what I'm doing right now. All right. So this proprietary system that I've created, that I use in my hedge fund, we call the volatility edge at Option Pad. And it is profound, and it is intense, and it is a lot, but it's also very simple because we're there to guide. All right. It's like your first day at school. We're there to guide you. All right. Why? Because, well, you get alerts on the phone, you get emails. I do videos. So here's what it gives you. It gives you the ability to buy tops and bottoms, and it puts professional trading odds on your side based on volatility delivered to your email box and texted to you. Here's what the system gives you. You'll get trades daily and weekly, all right? This week, as I stated, I put out 2 trades. Some weeks I'll put out 3, some weeks I put out 1. But you get all kinds of trades, all right? I do a daily update on my traffic light for both the S&P and the VIX. So you can see what our traffic light is saying on them. All right, we let you know when the light changes. You get a weekly video update and a video update whenever I do a trade. exact entry dates that I'm taking and exits that I'm taking texted and emailed to you. I've created, all right, a customized volatility course that is in the portal that will educate you on what I'm doing, why I'm doing it, and how I'm doing it, so that hopefully on top of the trades that I'm sending you, you're able to go out and find your own trades. And then I'm adding in my VIX primer course. That is a 4-hour in-depth class that teaches you everything about the VIX and the volatility ETPs like VXX and UVXY. We sell the VIX primer at $1,000. The specialized volatility course, if I pull that out, that's $1,500. So I've taken the guesswork out. You get all my knowledge as a professional market maker telling you how I'm taking advantage of this market. You'll know exactly when to do and how to do it. And it's pretty darn easy to understand because you get the trade, you get the video. And I'm going to help you manipulate this permanent volatility. So here's the offer. All right, I'm offering this as a 1-year package. All right, 1 year. Now, here's the beauty. I'm giving you the rest of this month for free. All right, so you buy it now, you get the rest of this month and all of next year, all the next year included, right? Pretty nice bonus. I think I'm going to try and pay for as much of this cost as I possibly can. All right, so I'm going to give you, all right, my absolute best trade for 2021. All right, and I'm going to give you 50 winning trades over the next year. If I don't come up with 50 trades over the next year and you're not happy, say, Mark, you only had 48 winning trades. I want my money back. Done. So I want you to get that volatility edge. Now, as a bonus, I run a investment strategy that we call Omaha Trades, and it's based on the put selling and option selling techniques that Warren Buffett used. All right, so we go out and we sell long dated options to create a portfolio. All right, and it's a way of maximizing the return on your portfolio. So again, here's the link. I want everyone to get that link, and then I will, if we have any questions, I'll take any questions if I have time. I'm going to show you the trade I'm doing right now on VIX. All right, and I literally just put this out. So the trade I like doing is for January, the 22, 19, 16 put fly. Now it's a little complex for some people, but it's one I really like. All right, I put it out when it was 80 cents half an hour ago, 45 minutes ago, but now it's 85. I still like it here. I think it's going to double. And like, as I stated, I'd buy it right now. Just did. So here's that link. If you've got any questions for me, I'm happy to take it. If we have time, we have about 2 minutes. But yeah, I'm looking at the January VIX 22, 19, 16 put fly. And the reason being is I do think volatility is going to fall off from here as we get stimulus done, Biden put in office, and probably the Georgia election ending. But VIX is going to have a hard time staying below 20 because we have that whale stepping in trading.
So you did have a couple of people asking you where do you look to see the liquidity of the market? You told TV that there was no liquidity.
That was
The
all.
difference, go ahead.
Yeah, so the way we looked at liquidity was in the VIX options themselves and the way VIX and the VIX futures were moving and within our traffic light, right? So as our volatility curve is moving, as VIX correlation is changing, that's telling us that liquidity is driving up and traders are racing for hedges, right? When the market is going up and traders want to buy puts, you know, you don't see that changing correlation. You don't see the VIX futures rise. So as we were seeing liquidity dry up, we were seeing a race to go out and hedge. And that's one of the things that tripped a couple of our indicators within our light that said, whoa, there's nothing here. Hopefully that answers that one.
All right, and then we got time for one more because we're right at 3:15. What do you mean by volatility futures giving the all clear? Can you quantify that?
So when I say volatility, when we're in that contango, all right, as I stated, when you're in a VIX contango, the market statistically goes up. You can take if that's the only thing you take away from this presentation, that's an amazing takeaway. When we're in a volatility contango, the market tends to go up statistically. When we're flat, it's very give or take. I don't know, I have the return off the top of my head, but it tends not to be very good. And when we're in that contango, like I said, I haven't looked at the last year, but we're in that backwardation when the curve is saying, hey, look out. Historically, the S&P has a really ugly return profile. All right. So,
all right.
Again, I want to invite everybody to join me on the Volatility Edge. Join me and learn in taking advantage of this permanent volatility. And Sherry, I want to say thanks again for inviting me on and having me on board.
I really appreciate you joining us. I did put up your link for the options.optionpit.com and the perm vol sales, so everybody can see that. Everybody is expecting an email as a follow-up, so we want to thank you. I hope you'll come back again in the future, and I hope you have a great 2021. Happy holidays.
Hey, thank you, Sherry. And same to back to you, and same to everybody else.
All right, you guys have a good day, and everybody stick with us now. We got another great speaker coming right up. Just a second, folks. Get all twisted around here, and sometimes the menus pop up different. All right. So you know the recording's available. That's why we're coming through. We have our next speaker coming up right now. I'm super excited for Dan Gibby to join us. He is with Master Trader. He's bringing us the presentation, Trading Late Day Breakouts and Breakdowns Using Master Trader Strategies. Now, he possesses more than 25 years experience in equity and options trading with expertise in technical analysis, using options to hedge and speculate, and portfolio/asset management. Dan formed Master Trader with Greg Capra, who is the founder of Pristine.com and the pioneer of online trading using technical analysis to provide education to stock and option traders, as well as consult for money managers and high net worth investors on technical analysis and strategies to generate ongoing additional yield. Welcome, Dan. I'm so glad you could join us. I'm going to make you the presenter. Can you hear me? Are you there?
Yes, I'm here. Sound check. Hello. Good afternoon, Sherry.
Awesome. Thank you for joining us. I've made you presenter so you can share your screen when you're ready and take it away.
All right. Awesome. Welcome, everybody. Thanks for those kind words. We have a phenomenal presentation here for you this afternoon because you're going to hear me use different terms. I'm going to talk about psychology a little bit, but trading is all about doing something objectively and systematically over and over again, and you'll hear us use the word objective, which means existing in fact. It's not subjective, which means it's something that's appearing in your mind and you're subjecting your wishes on what you want to happen. So our approach is in this chart right here. Everything is technically based. No pattern, no trade. So we're looking for a compelling price pattern. I will obviously show you what a number of those are, but today we're just going to focus on one of those patterns, which can be traded on any time frame, on any instrument that moves, but I'm going to focus on an intraday time frame, particularly the afternoon, and that's why we call it a late day breakout or late day breakdown, because they have incredibly high odds of success, particularly when you overlay the other components of our methodology to make this compelling setup. What my partner Greg and I say, it's a no-brainer. And I have many examples to show you examples of what these no-brainer patterns look like. So sure, I'm going to show you the late day breakout, but what's the overall trend? What about multiple time frames? Are they in agreement? Where is support and resistance? Is the issue showing relative strength or weakness to the market? Retracement analysis, bar by bar analysis. I'm gonna point a lot of examples out today on these for you here, because once we call it like a gotcha. Once I see this setup and I see maybe a breakdown failure, then does it mean they're all going to work? Of course not. But the odds are so overwhelming that you just need to follow your trading plan, calculate the proper position size, enter it, and manage in between. It's that simple. So these are all pictures. I purposely am not giving you a time frame. I'm not giving you what they are. This could be a stock, a bond, Bitcoin, could be an electric vehicle stock, could be a currency, anything. Every one of these are compelling pictures. Then, based on the chart we just reviewed, you have to say, okay, well, what do these pictures look like in multiple time frames? What's the trend look like? Is it showing relative strength or weakness? And then that is my pattern that I'm going to trade. So we have many compelling patterns that we trade at Master Trader. This is a very simple, what we call Master Trader buy setup. It's a pullback and an uptrend, a reversal and support. And these are our pictures of buying where the trend should continue. Red bar ignored, breakdown failures. So I'm going to show you a number of these within the context of a late day breakout or breakdown, but it's not the pattern that we're trading. These will just be additives, if you will, to make the setup even better. Now, there's so many folks out there that they want to focus on a Harami or all kinds of crazy names. And at Master Trader, we don't. You are not, I guarantee you've heard it over and over again, either with today's speakers or other presenters you've heard in the past, where they want you to believe that they have a proprietary system, red light, green light, whatever they want to, what label they want to put on it. You will never hear Greg or me at Master Trader saying we have something proprietary. We teach you how to objectively read price action and how to objectively and systematically pull monies out of the market based upon your trading plan. So here, this one I love. This is my partner, Greg. He says, call it what you want. Call it a flying moonshot. I don't care what you call it. This was a red bar, inside bar, and 100% retracement. It's a derivative of this bull 180 reversal. Call it what you want. It's going up. Call this what you want. It's going up. It's a range expansion bottoming tail bar. So that's what we offer to you, is how to just objectively read price action and to trade and invest. This is the setup that we're going to be focusing on now for the rest of the afternoon. Late day breakout, and obviously it applies in reverse. Now this, we want a bullish, so we have setup, and action. We want at least 10 or more bars of base or consolidation in a tight range on the 5 or 15-minute chart. We want that consolidation to be in the upper third of an earlier bullish move. Why is that? Well, because this is then a bullish consolidation, and on a breakout suggests a continuation move higher. We want it up on the day, above its 20-period moving average, and over the prior day's close, showing relative strength to the market in the sector, a plus. You're going to hear me use the term price void, and it was actually on the first chart one of our concepts, where I say I want a compelling pattern with a price void. And what that means is you look to the left and there's insignificant resistance, which means overlapping bars, consolidations, that is going to halt a fluid move higher. That's what we want. I'm going to enter over resistance on increasing volumes preferred, but it's not required, after 2:30. So these set up, and we don't take them before 2:30. That's one of our afternoon reversal periods, 2:30, 3, and 3:30 Eastern time. We want bullish market internals as a plus. So if the broader market's breaking out, as your stock is, and then once we're in a trade, we're going to manage in between. This is just a rough rule here. We're gonna, your initial stops under support, obviously, sell half under a prior bar's low, and then, provided it's not near its target or extended, you have to let it retrace against you and form a pivot. And remember, if we haven't, assuming this triggers at 2:30 Eastern time, you've got 90 minutes before the market's going to close. So there's plenty of time to let it have a nice afternoon run. Let's jump into the examples. And you'll see every one of my charts is very clean red and green candlesticks. We have a couple moving averages. So I use the 20, 50, and 200 on the daily. I just use the 20 period on the intraday. And we use it as a trend following. So let's just start over here. This is not a late day breakout, but I'm just showing you how we analyze the overall compelling setup. So this stock was in a downtrend on the 15-minute chart. It did a greater than 100% retracement, and then bullish price action. The next day, it had a bearish gap down and immediately recovered in the first 15 minutes. It negated the gap and then went sideways into after the 2:30. That is a beautiful late day breakout. Now look to the left. There's no resistance to the left. So that is my price void. All of this bullish action here is my launching pad for an afternoon move. This was the next day, and bullish price action. It's in the upper third after 2:30 p.m. There's another breakout. You buy over the bullish bar, stop under the low. You can sell half, as we said, under a prior bar's low. And if there's enough time into the close, you can trail pivots. Now, this is a 15-minute chart. If you were to drill down to a 5-minute chart, then it moves faster, of course, so you would get those pivots to trail. Just showing you multiple time frames now, how when they're in agreement, you're going to have higher odds of success. So this blue dotted area here is one day, and it's this particular day that I have an arrow on. So you can see the daily chart broke out, bullish consolidation at resistance, had a small gap down. You can see here, small gap down, wide range bar on the 15-minute chart. So this is 1, 2, 3, 4, 5, 6. So the first 90 minutes of the market day showed incredible strength. And then what did it do? It went sideways in a tight range in the upper third of the day's range. Now, remember I told you I'm gonna point to things that make the trade even more powerful. This bottoming tail, ask yourself, what did this bar look like at the day's low? It looked like an ugly breakdown bar. But when you have strong trends like this is normal. We expect red bars to get ignored. So that closed with a bottoming tail, green bar, red bar, but it's really these just red green is really irrelevant in the overall picture. It's bullish consolidation. So where I have this arrow here, we'd buy over this little topping tail. My initial stop is under this bottoming tail, and I'm managing it to the close. There's so many just wonderful examples. These dotted lines are pre-market. So you can see it gapped up a little bit, bottoming tails here, and then right at the market open. First 30 minutes, powered up to the prior day's high. So that's 100% retracement. Now see, remember I talked to you about the 180 reversal on the slides above. This would be a 180 reversal if you were to look at a larger time frame, like the daily chart. Because from here to here, closing at the low is a big, ugly red bar. Okay, within the first 30 minutes, it's closing back to the high. It's negated that red bar on the daily. Now I have bullish consolidation. I have tails, bottoming tails. I have red bars ignored. I have an attempt to break down. And then this bar right here, this is the bar that was a closing breakout. This 15-minute bar closed at a new high. That is your entry. You buy over that, stop under the low, trail half under a prior bar's low, and then if there's time in the day, you can trail pivots or go down to a smaller time frame. You'll see these things just jump out at you over time. So this gapped up, came in, this is what we call I know it's not today's subject, but this is what we call a bullish 1, 2, 3 continuation. We had a wide range bar right here, an inside bar in the upper third. That is a buy over the high of these bars, initial stop day's low, manage in between, bullish consolidation after 2:30 p.m. There's your breakout. Look, this thing was so strong, it did not even trade under a prior bar's low. That is an example of easy management. easy setup, easy management. You just literally and we have traders that they program their software. Hey, just trail under prior bars low, and they don't even have to watch it. So that was an easy one. Starting over here, took off. This was a bullish close. This 15-minute, that's a bullish close. Buyers went home confident that this stock was going to move higher, and they were right. Right, it gapped up here because here's the market open. It gapped up, went up, consolidated. Could this have been a late day breakout? Yes, if it triggered, but it didn't trigger. That's no problem. It didn't trigger. There's no harm, no harm. My entry would have been over this topping tail bar right here, but it didn't trigger. The next day, it's still bullish consolidation. It's still over lunchtime right here. So even though this breakout did work, I don't trade breakouts over the lunch period because unless the market's in what I call a trending day, then I don't trade over lunch myself. I wait till after 2:30. And then this gave you your afternoon breakout there. And look, it says when it's resting like this, when it's resting, you can see it doesn't get far from the 20-period moving average. That this is a controlled uptrend. This, yeah, my eye, whenever I look at a chart, my eye just jumps out and sees patterns that I love. This was a beautiful 180 reversal right here. That was tradable. But we're trading like day breakouts today. So here, a bullish gap, 2 resistance. I have 1, 2, 3, 4, 5, 6 inside bars. This is a concept that we call bullish price action. Bullish gap, 6 inside bars. We call this absorbing resistance, absorbing supply. It broke out in the morning, bullish consolidation, closed with a small little bullish engulfing bar right here. You could buy over that bar, add on this bar, and you're in management mode. You got your pickup in volume here. Buyers are buying it. You look to the left, you have a price void. I'm going to show you a late day breakout because we trade stocks and options at Master Trader, and what we call a directional trade is what I'm showing you today. We have multiple time frames in alignment, and I'm either buying stock or I'm putting on a bullish option trade, a directional. So that would be buying a call. We also sell options, and we call that an income trade, where we're just calling a short-term top or bottom, and we're putting money in our account, which we get to keep over time through time decay. But I'm just going to show you one example of this, of an amazing option trade. There's so much misleading information about trading options. It's just shocking. One of them is don't ever trade short-term expiring options, long or short. Well, without proper education, I agree with that, but you all know the story. Don't cross the friggin' road if you aren't looking both ways and know what you're doing. But day trading liquid options, provided liquid is so key, they have to be liquid, then I don't mind buying short-term options either that expire. I'm going to show you an example. It expired the same day. The key is you aren't paying extrinsic value. That's the key. These are our favorites: Spiders, Qs, Facebook, Apple, Microsoft, Intel, AMD, BAC, Cisco. These are all very liquid that are good for day trading options. Use any compelling setup taught in Master Trader Strategies. Today we're talking about late day breakouts, obviously. And you have no gap risk. It's a day trade. So here's Google, and here's our late day breakout. This had a bullish gap up this day, bullish price action, and it rallied into the close. But the next day it gapped up. This is a little breakdown failure. Notice how it broke down. It retested this wide range bar and snapped right back and went sideways. Red bar followed by a bullish engulfing bar that was a closing multi-hour breakout on the rising 20. This for us to buy 0 DTE out of the money calls, I admit to you, is rare. This is not the norm. The norm would be buying a couple day out at the money or in the money call option, because I'm not going to lose much time value in an hour, for gosh sake. So I don't mind buying a 5 DTE. But look what we did here. This is what I call the intelligent home run. Google, I knew this thing could sprint. We had 90 minutes into the close. This thing could sprint $10, no problem. So we bought an out of the money call for 35 cents. And we planned it. I said, look, you can buy in the money, but I was in the trade. I said, I'm gonna buy this 35-cent call. And this guy rolling in the room with us, we sold it. He sold his for $8.50. Some people got more. We call that was a 23x bagger in an hour. But that's rare. I'm not one of those people to say, oh, come with us and I'm going to teach you how to buy your own Learjet in 6 months. No, we don't talk that way. We teach you how to objectively trade stocks and options. Another example here, up on the day. I know we can go through these faster. They're just when your eye gets to see them. Nothing here. This is not a good setup. Why? Well, go through the list that we went through. Yes, it is up on the day. It's not a tight, controlled consolidation, and then it petered out. So it's not in the upper third. But the next day it is. It's up on the day, bullish consolidation, afternoon breakout. Just another example here. They're beautiful. Now see, this was a big gap that got far from the 20. It was from a base though. So that is strength. A gap up from a base does suggest higher prices. But we, and we teach how to trade gaps, of course, but we would rather look for a continuation pattern or this. This is the highest probability, folks, because all of these bars that are consolidating on the breakout is support. We always want to trade and enter our patterns near support, not when they're extended far from the major moving averages, far from support. Let's look at a couple breakdowns now. Down on the day, had a little bullish gap up that got failed, bearish consolidation into the declining 20, and it's now the opposite of what we've been talking about in terms of I want to see topping tails. Why? Well, because a topping tail is in a failed attempted breakout, right? All of these, well, every trade is a buy and a sell. We all know that. But you can see bottom fixtures here in the green bars. They're like, hey, this thing's oversold. I see some support on the left over here. Let me bottom fish and try to buy this for a scalp up to 102 maybe. And then they go nowhere. The green bars go nowhere. The topping tails are signs of selling. This bar was a closing new low. That is our short. Stop over the tail, manage in between. Here showing you multiple time frames. Nasty downtrend on the daily chart. This price action obviously is this bar right here. So it had another continuation gap down right here. So it gapped down pretty much under the prior day's low, bearish price action, and couldn't bounce. I would enter under this red bar, stop over the red bar, look to the left. There's a price void, both on the 15-minute chart. Look on the daily here. Look to the left. There's no support over here. And granted, I'm not showing much information, but I'm only in this trade for less than 90 minutes, and there's no support. That concerns me. Another example. Bearish gap down under multi-month consolidation. Here's my gap down, wide range igniting, stabilization, topping tail, green bars ignored. This is what we call just a no-brainer short, folks. Just short it. There's nothing to the left. And then your stop is over a pivot over here until the trade starts working. And then you, as we said, you can trail half over a prior bar's high. And this green bar might have just stopped you out by a penny or two for half. But then when it makes a new low now over these tails are your new stop. It's that simple. Another one, daily. I'm just showing you that these are bearish patterns, so multiple time frames are in agreement to go lower. You can see my declining 20 period is under the declining 50. I look to the left, there's no support over here. Here's my 15-minute chart, topping tail, big ugly red bars, one green bar, so obviously buyers stepped up, bottom fishing, and what happened next? Bearish engulfing. Green bar went nowhere, topping tail, nowhere, topping tail, nowhere, green bar, nowhere. This red bar was a closing new low, but it still looked like it was a little bit into lunch right there. Bearish, folks, I mean, we say that the charts don't lie. So this red bar, 1, 2, 3, 4, 5, 6, 6 bars times 15 minutes is an hour and a half. An hour and a half of buying. It couldn't get back above this red bar. Short the low. Stop over the high of this red bar. You can see the volume picking up because the volume picks up for 2 reasons. One is you have people like me, which are selling to open, to short. And then you have people who have been bottom fishing and praying all through lunch. Please, 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 God, hold, don't, please hold. And they put their stop order in here, volume picks up, and you start your late day breakdown. Just want to show you our green trading room where Greg Capper and I were in this every day. We start at 9 a.m. Greg gives pre-market review of the sectors, market internals. I review opens, gaps, hot list items, and we actually we project it for free on YouTube from 9 a.m. to 9:30 a.m. every morning. Go to Master Trader YouTube channel and you can watch us. But for $7, we have a free $7 trial for 5 trading days. And you can watch us. You know, I'm sure you've watched impressive sounding presenters and we're showing you these beautiful charts and it sounds impressive. But if you really want to see presenters walk the talk, watch them in real time. And you can watch Greg and me 9 a.m. to 4 p.m. plus some post-market review every trading day. So go mastertrader.com/green trial. Another one, this one over here is sloppy. I don't like how wide and whippy it is, but now look, attempted breakout, sell off into lunch, into noon. Same idea, folks, same thing. Topping tails, green bar ignored, into the declining 20, no support to the left. I hope you see how easy these setups are. I mean, I started with that sheet about our bullish money patterns. We teach a dozen of them, but you don't have to be a master of everything. You should be a specialist. You should pick the high probability patterns that you are comfortable with. You don't need to go to the buffet line and eat everything. Become a specialist. So here, what I remember when I said, hey, the gotcha trade, this is my gotcha bar. This was a big wide range green engulfing bar at the bar's high. Now you got to remember, while the bar is still open, the bar is still moving around. So it closed with a topping tail, closed with a lower high under the open, next bar, lower high, lower low, gotcha. I'm shorting under this red bar. I'd give it the initial stop over all these tails until it gets what I call altitude. You want to make sure the trade gets working, just so you don't get caught up in a little whiplash and stop you out prematurely. And now I'm simply in management mode on that short. Another one. This is what we call a wide range igniting bar. Wide range igniting. Slice through 1, 2, 3 days of data. This was an attempted hold right here. This is a 180 reversal. Went sideways though for the next 2.5 hours. Gave up the ship. It couldn't bounce. Couldn't bounce. Another one, bearish gap down under support. And do you remember I mentioned the term price void? This is a picture of a price void. When you have a momentum move up like this, sideways, and now it's gapping down. If you look to the left from this gap down, there's no significant support to the left because this was a momentum move. Consolidations like this are supports. So this is in agreement of, even though there are bars here, this is a price void. It is in significant support because of this 1.5 day bearish consolidation, on the gap down. This is overhead resistance. So it gapped under support, topping tail, tails, same story, green bars ignored. And that's just a no-brainer afternoon short, and you manage in between. Finally, another example, bearish downtrend, 20 under the 50, green bars here, couldn't bounce much at all. Now I have a new breakdown. So this red bar on the daily is this ugly morning sell-off. No support to the left, tails, false breakouts, and you short the low, same as before. So that is it, folks. I hope you enjoyed that that focused lesson. Sometimes, you know, Greg and I do a lot of presenting, and as I said, we actually also, for those of you not familiar to Master Trader, we have we do what we call a Master Trader Live on YouTube every Wednesday at noon. We've been doing them for 3 years now. It's 1 hour of power-packed education. So come there and you'll see us present also. Sometimes we talk about our top 5 patterns. I mean, we have all kinds of amazing subjects. But today I wanted just to focus on this one high probability pattern that does apply to anything that moves and on any trading time frame. It still works, but the late day one was on the 5 and 15-minute chart, exactly as all of these examples showed you. So we're actually finishing a minute or two early here. If anybody has any questions, I'll be happy to answer. These are our specials that we run through the end of the year, and they're on trading stocks, they're trading options, there's our advisory letters. We have them divided up into categories, but those are our best prices of the year. We've been teaching for 25, 30 years, and unfortunately, there's a lot of just self-serving people out there. I'll leave it at that. And we get a lot of people coming to us saying, thank goodness, I finally found you all. You're the real deal. And we love it because we genuinely love giving back and helping people learn to grow and succeed in trading and investing. So on that note, have an amazing holiday, everybody. Thanks for attending. And if you have any questions, feel free to email me, Dan.
Hey, Dan.
mastertrader.com. Yes.
I did have one, and I don't know if it's lost all context, but I suspect that it will make sense to you. Is there a way to predict when market makers will stop hunt?
I have no idea what stop hunt means, but let me still just add a little bit of flavor to it anyway.
All right. That was right around 3:30.
Yeah, Greg and I, we traded very active. Greg started trading before direct access was around. So
he says to stop loss hunting.
Oh, I'm still not sure what that means, but I would not get hung up on market maker games like that. That used to be reliable in the 90s in the direct access days. Now there's too many algorithms that, yeah, some are designed to gun, G-U-N, stops. And that's a whole separate thing that we teach called shakeout patterns. And that was like one of those breakdown failures I taught. And that's like a classic clearing out the stops and snapping right back. But you cannot predict them ahead of time. And I just think it's a losing battle. I'm trying to outsmart market makers in light of all of the algorithmic high frequency trading going on these days.
Good point. Good point. So you were going to tell everybody how to get in touch with you, and everybody knows that they're going to be getting an email from you so that you can reiterate your offers. I think you had a couple of links that I put up in the open chat area where people could see it. It was the Thanks 2020, and the other one was the green trial, right?
Right. Awesome. Thanks for that. And yeah, you can just email me, dan@mastertrader.com, with any questions.
There we go. I'm gonna copy and paste this one to everybody again. All entire send. Oh, guys, you got to take the brackets off. Go to webinar, puts those little brackets on each side. Everybody says that doesn't work. Well, you can't use the brackets when you're trying to use the link. So when I type, you know what, if I would have just typed that in, which I did above, if you'll scroll up, you'll see it. But the learn stocks and option tradings at amazing rates is relevant. So I just copied and pasted what you sent me. But I really appreciate your talk here today, and I hope everybody got a lot out of it, and we'll definitely send you lots of email. Just what you want, more email. But I think he really does, you guys. So you said you need to tell us your email one more time.
Yeah, Dan@mastertrader.com.
Perfect. Okay. And with that, we have pulled another Traders Exclusive webinar to its ending. And I appreciate you coming in and being with us, and I hope you'll be with us again in the future.
Awesome. Thanks so much. Have a great holiday, everybody.
Thank you. You too. Okay, everybody. I just like to thank all of our presenters for joining us today. Let me just put up my screen one more time. And I appreciate everybody who stayed for the whole presentation. Visit our website, tradersexclusive.com. We're also on Twitter at options_info. And have a happy holiday season. Thank you for attending, and trade well.